Hey folks, good morning. How are you guys doing today? Can anyone confirm me if you can hear me loud and clear? Let me know in the chat if you can hear me loud and clear. And after that we're gonna start. Five by five. Thank you guys. So we're gonna start now. So today is day before CPI, right? So day before CPI most of the time turns out to be low probability. Like from my experience, I found that it's a higher degree of probability that it's gonna be a low probability day. So if I put it in a ratio, it's gonna be like 85%, 90% of the time I saw a price not respecting the things that we want to see on chart. So there's this thing. So when we see this kind of scenario, and when we are expecting this kind of scenario, it's better for us to taper it, right? So today we are gonna do that, and the main reason behind me streaming today, we'll also try to find out how many trades works today. PM session is gonna be the worst today, so I'm not gonna be doing PM session streaming today, because tomorrow, as I told you guys, morning at 8:30 we'll have CPI delivery. So if there's a ratio for like 80% of chance AM session is gonna be low probability, the chance is higher that PM session is gonna be more low probability. So I have no interest to do trading or tape reading at PM session, so I'm gonna do a stream for like till 11 o'clock today. So it's gonna be like 3-4 hours already, right? We'll do stream for 7 hours like we did yesterday tomorrow again at CPI. So we'll have a whole idea of how price delivers at PM session and as well as at AM session. And seems like AM session is better for us. We win more trades on AM session. PM turns out to be more like we lost more there. So yesterday we lost like 2 trades, and we won 1 trade at PM session, and at AM session we own like 7 trades and we lost like 3 trades. So which one is better? Of course AM session, right? So I'm mainly like AM session trader. Me personally, I never trade PM. So yesterday I just did it for you guys to see how the things works at PM. But we will do long sessions like this. It's not just for you, it's also for me. Like it helps a lot to me, like to learn more. So there's this PD area. I'm on weekly chart on Nasdaq. This is a PD area that I marked yesterday and told we were expecting to see price coming up here yesterday, but price did it today. This is the inversion, right? And once I keep drop down to the lower time frame, you guys will see that how perfectly price used this inversion to get resistance towards sell side. So there are a couple of levels that we're gonna take from weekly chart. We're not gonna take everything. We're not gonna make our chart choppy, just the levels that we believe are gonna be important. These are the levels that we're gonna take. So I'm gonna take the inversions low right here, the inversions high, and there's another nearest liquidity pool is that this fair value gap high. So at this price level we will see algorithm becoming sensitive when it's delivering liquidity, right? So let's go to daily chart, and the deciding bias, folks, is very simple. It's just the fact that you mark out the PD area where you believe price will be sensitive. You don't have to have an idea where price is gonna go. Like see here, I'm not trying to force to see like price is gonna go there and then it will come down. I never do that. I wait to see how price will react inside these PD areas, right? So price itself on lower time frame tells me where it wanna deliver. Like suppose I'm just gonna give you guys a little idea. Suppose when price hit this inversion, well, if I'm expecting to see a resistance what I will do, I will look for equal lows, I will look for unfilled fair value gap or trendline liquidity towards sell side. If I see that on chart, on lower time frame, that means what? Price is giving me signatures that it wanna deliver liquidity towards sell side after it hits like a higher time frame resistance level. See, it's that simple, right? And we had so many winning trades yesterday, 8 winning trades just by following this kind of structure, this kind of market pattern, right? So if it's giving us money and it's simple as well, then why not use it? So we got our inversion weekly high, inversion weekly low, fair value gap high here on the weekly chart. So these are the things that I'm gonna take from daily chart. There's another important thing to keep in mind. It's just like another gem. I already shared it yesterday. What do you guys see here? What is this? This is a balanced price delivery, right? We have a week here. This candle opened, then it came down, delivered sell side liquidity, then it retraced back again, delivered buy side liquidity, and at the same time we got a fair value gap right next to this week. So when we see this kind of scenario, that fair value gap turns out to be a breakaway gap, and we can also use breakaway gap as a market structure shift to confirm like where price is gonna go afterwards for the session. So what do we see here? That price, where did price stopped? As soon as it hits, hit this week right here, right? So most of the time you will see that price is not even coming near to the wick. It will just stop like suppose here, because this area of price it's balanced. But if you are seeing that price is coming inside this kind of wick, you will expect like an immediate rejection. So a question can be made from you guys that when do you know price will deliver with speed? These are the signatures in price where price will, if price is near to this kind of liquidity level like here, price will either will reject with speed or it will go higher with speed. So there are two types of scenario. It will not consolidate inside here. Consolidating inside this kind of price level is low probability. Make sense? These are very simple concept, folks. It's always been there in front of your eyes, but you never like the fact that you guys are lazy, most of you. Like our mentor talked about this, but what he did, like, it's never organized. Right? So you will see him talking about one concept at one video, then he will talk about another concept, another point of the same concept, like in like after 2 weeks or 1 month or 2 months. So it's never organized. So if you are like putting everything organizedly, then I believe it's pretty easy to find even from his lecture. So this is our breakaway gap. We got a rejection here. So now let's go to the 4-hour chart. Yes, I know it's 8:20, but do we care about a trade? We don't. A trade will always be there. It's for you to understand how price will deliver. That's the most important part in our trading. If you can learn how price will deliver liquidity next, where price is going, if you understand draw on liquidity, then trust me, finding a setup is very easy. Like suppose you know price is coming towards these order blocks. It doesn't matter what PD area you are trading, you will have a winning trade from any PD area, from a breaker, fair value gap, order block, because you know this is the DOL. So see, that's what I'm teaching you guys. That's what I'm showing you guys, that this is the part where we focus most. It's not about the model. It's not about the execution or managing stock. These things comes after. First, we focus on how to find out our DOL. That's the most important part. So this is our bullish order block. We don't have an equal low down here. I would have preferred this swing low, like suppose if this week was coming near to this week, like more near. So like this, a scenario like this. That's what I'm trying to say. So I want to see like price going towards buy side liquidity from this order block, as it's a bullish order block. But again, we are not just going to rely on one single concept to see price delivering towards buy side. We'll drop down to the lower time frame And as I taught you guys already, there are 3 types of strong liquidity levels, right? Who can tell me like what are those 3 types of strong liquidity levels? The folks who don't know, keep an eye on chat, and you will learn from there as well. So we got our order block from the hourly chart. And we also have a fair value gap here, right, with the order blocks. So as I told you guys that when you see a wick next to the fair value gap, that fair value gap turns out to be a breakaway gap. But again, there's another fact. If price is trading inside this kind of scenario, there's a high probability that price won't, but at the same time, nothing is 100% in trading. So we will always have, if price is doing that, what price is gonna do next. So what do you guys see here? Isn't it looking like price retracing with speed from this gap, right? It's more like a IOFED situation. So that's what we want to see. We want to, if price want to respect these order blocks and this fair value gap, it will just reject immediately. These are small little signature in price, folks. When you know what price will do at these levels, when you have that idea, it becomes like the things becomes more clear to you. So this is our fair value gap, BC from hourly chart. So look here, what I'm doing, I'm only marking the PD areas that I believe price will, like price is near to, what price is showing to me at the present moment. That's what I'm marking. Here's another PD area that I can see here. This inversion, price already got rejected from this inversion, right? Price already got resistance. Then how we will use this inversion next? This inversion, if price is going above it, we are gonna use it as support. Previous high and lows, PD areas and imbalances. Okay, no. There are a couple of people who told it correctly. Equal high, equal low, trend line liquidity, unfilled fair value gaps. These are the 3 types of liquidity levels that we care about. Yes, there's another person who mentioned previous day high and lows are also important, but trend line liquidity, equal high and equal low, and unfilled fair value gap is more important, and it goes with our trading model. We can use it as a target. So we will see what price is doing here. We will also measure these order blocks from this level, because I'm gonna rely on higher time frame, right? On higher time frame, these weeks are just a part of manipulation. Inside this candle's body, we have most of the liquidity. So if I am seeing an order block on 4-hour chart, I'm not gonna minimize or customize it on lower time frame, because price is gonna respect higher time frame most of the time precisely. So this is the 0.5. That means what? Mean threshold. But again, we don't want to see price going below this BC that I outlined on hourly chart. Our mean threshold is coming here. Now let's go to the 15-minute chart. It's 8:21. Let's do it quickly. So see now this gray box, let me change the color. This blue box that you guys see, what is this? This is our inversion from where? From the hourly chart. As I told you guys that this will give us our narrative, why price should go higher or why price should go lower. So do you guys see the narrative itself? Price showing to us what it will do here. So we're going to expect to see price resisting towards sell side liquidity from here. Why? Because we have this equal high. And again, if price is respecting this inversion towards buy side liquidity, we'll know where price is going next. This equal high. So this is how you know if this order block is gonna be respected by price, right? When we have this is another important gem, folks. You will see it every day in your trading. How do you know an order block or any PD area will fail? If that PD area has equal high, and that's a bearish PD area, then that PD area will fail. Price will move towards this kind of liquidity level. A liquidity level is more important than a PD area, Makes sense? And it's the most important part for you to understand. You should be focusing on learning how to determine where price is going. I'm telling you guys again and again, what you guys do wrong is like you focus on a model. Okay, if I master breaker, then I'm gonna be profitable. No, if you don't know where the breaker will send price, then how are you gonna be profitable? Ask yourself this question. So we got our target, equal high, and this is what we have. We got equal high again. So the way I'm gonna see chart is that this is gonna be a target 1. This is gonna be our target 2. So either we probably will get a trade when price is coming towards here, but if we don't, we will try these order blocks that will turn out to be a breaker afterwards. So see, we will always have a trade idea if we know where price is going. Again, how am I gonna know, Hydra, that this order block are gonna be failed, or if price will support this order block, get resistance from this order block? What do you see here? When an order block has equal high and that equal high is not a SMT, price will come back to these levels once it takes order from deep discount. And how will you know that price is gonna take orders from this deep discount? So there's a lot of things I want to talk about, but again, look at the time. I will quickly drop down to the lower time frame. What is this? This is the OT level. So these things, I don't need to put Fibonacci to see the OT anymore. It's just there. I know, okay, this price level is coming to the OT. So you will also get there, folks. It just requires some experience from your part. So how do you know the price is gonna get support again? We are trading inside this BC. We are also trading inside OTE. So do you guys see the logic? And here again, dropping down to the lower time frame, this is where we will frame our trade idea and stuff like that. What do we have here? We already got a couple of bias that will lead us, sorry, couple of breaker that will lead us here, most probably. So we also have another equal high here inside this inversion on 5-minute chart. It wasn't visible on 15-minute, right? But now that I'm dropped down to the 5-minute chart, so see, it's visible. So see, the bias is decided. Now we will work on the model. We'll see if we can find a high probability model or not. Okay, now is the time to work for the model. We already have a good idea where price can deliver potentially. We never say, okay, 100% price is gonna go there. And today, among other days, is a low probability day, so we will be more cautious about this kind of stuff. So on a 5-minute chart, we got a mitigation block here. This is not a breaker, so these are the small things that you should be keeping in mind, that if price is not doing a stop hunt below a all swing low, that these up close candles will not become a breaker. So as long as price is not doing that here, we'll look for a SMT with other pairs. Where do I look for a SMT, Hydra? Because I got a lot of comments, like a lot. I'll put it into ratio, like 60% of my students who are inside my mentorship, they told me to give them a deep lecture about SMT. But it's such an easy concept to find if you know where to look at. I'm not looking for SMT everywhere. I'm looking for SMT when I'm expecting to see a breaker getting activated, or a breaker to form, or when price is near to, like, suppose important swing lows like this, right? I'm not thinking this is a SMT, but I'm telling you guys, this is where I'm gonna look for price to see if price is forming a SMT here. Make sense? If price is, because I'm expecting to see these up close candle working as a breaker. So a breaker needs what? A stop hunt. So if price is not doing a stop hunt here, it will probably do that on other pairs, because they move how? Correlatively. Makes sense? So if you don't check for SMTs, what you will do wrong is that you will believe, okay, this is equal lows, so price should come down and then move higher. Yes, price will come down, but if that's a SMT, price won't immediately. Price will move higher, take orders from the premium level, and then it will move towards these kind of price levels. Makes sense? And all along you will be like cursing the price action why it didn't came down here, but you are missing the fact that there will be ASMT. So put it down in your notes. These are the levels where I look for ASMT when I'm expecting. So okay, I'll write here, okay, so that you guys can, that's a very important when to look for SMT, right? And with my model, this is how I do it, because if you are looking for SMT in every single price lag, you are keeping your focus diverted, right? So you should be focusing on your where you are putting your focus, and it should be on the chart that you are trading. So just put other charts like on other monitors if you have. That's how basically I do it. So now that I'm on 1 minute chart, I can spot a breaker, right? What is this? On 5 minute chart, it wasn't visible. Like, see, we have up close candle here, but no stop hunt below these levels. But on 1 minute chart, it's very, very clean. And this level is the order blocks high from the hourly chart, sorry, from the 4-hour chart. Do you guys see that? This level right here. So let me adjust it right here. So see, every single PD area will tell us how price will behave. I'm not gonna take any trade today, folks, because I know this is a day that most of the time delivers liquidity with low probability. So I'm gonna trust in my ratio, but again, I'm gonna spot the orders for you guys. I'm just gonna check like how many trades turns out to be a profitable trade. Okay, so see this kind of scenario. Because of that, this is what I mean when I'm saying it's a low probability condition. See that in a good day like yesterday, if you are seeing prices going above a breaker, price won't do that. But there's always a chance for price to do that. And when is that chance? When we have low probability that like day like today, when we have CPI or NFP, strong news deliveries like tomorrow. If you're expecting a news delivery tomorrow, then the day before that is gonna be the lowest probability day. So again, I can see another trade idea. So probably we're gonna demo it, right? See the manipulation here. So what we expect here is that before price activates this breaker, price should come down and clear out these equal lows. That's the high probability condition. But what happened here? Price left these equal lows, and then it activated the breaker by closing the candle's body towards buy side, and then it came down. So this is what I mean as low probability. In a day like this, there's a trading strategy that works. The strategy is based on swing high and swing low. You will focus only on swing highs and swing lows, not on any other PD areas on lower time frame. But these are kind of like advanced theory to understand. It's better to avoid these kind of scenarios, like these kind of days, just to just taper it and see like what you can spot here. Like these days are best for journaling, right? So what price did here, when price leaves equal low like this, I always tell my students not to buy from that breaker, right? Why? Because price left these equal lows. We expect to see price clearing out these equal lows before it activates a breaker. Makes sense? Very simple to understand, folks. So if price is leaving liquidities like this and there's no SMT, that breaker will fail. Now the folks who are expecting me to see execution, you guys can like, I'm not gonna do it today. It's not every day when we trade, and today is one of those days to journal, to gain more experience, to see how price will behave in a day like this. If you are looking for a trade here, all that you are thinking is about money, right? But you are missing the fact that how price will deliver here. You don't know that. Your experience not tells you that. Why not today? Because CPI week, not CPI week. We traded yesterday, the day before that, even on Monday. It's day before CPI. That's why it's low probability. And I'm explaining the fact that why it's a low probability day. So this is a turtle soup scenario because we got equal highs above here, right? But again, I'm gonna take you guys on other correlative pairs, and I'm gonna show you guys how to align price action like this with other pairs, and those pairs will confirm if it's a turtle soup or not. And that works like more confirmation for us. What do you guys see here on ES? This is a 3-minute chart on ES, and price has liquidity in both sides of the marketplace. Price generated what? What is this? This is a in retail theory they say it what? A pennant, right? So how do we see it? A retail will see, like, suppose if a price is going above, they will use this as a support. If price is going lower, they will use this as a resistance, and they will expect price to continue lower, right? But in a scenario like this, when price is forming a pennant, we wait for price to clear out one direction and then target the opposite direction. And where price makes sense to deliver liquidity first? We are expecting bullish price action. Why? Look at dollar. Okay, I didn't talk about dollar today, but again, I'm gonna talk a little bit, okay, folks. So this is a 50-minute chart on dollar. What do you guys see here? We have multiple breakers here. That means what? So many PD arrays that can that can show resistance, right? And how do you know that the order block will fail or it will get support or resistance from price? Look at this order block. Does it have equal highs above? No. So that means what? This is a high probability order block. As soon as price came up, hit this area of resistance, price showed a willingness to go down. Now price is chopping around on dollar, right? And when you see a scenario like this on dollar, you can expect to see low probability condition on the pair where we are trading, like NAS, DOW, ES, right? There you will also see a consolidating period. If price is not consolidating, like suppose here on DOW is not consolidating, it will deliver with low probability. It will respect our PD arrays less, right? So this is how you know when to, like, how to distinguish between a high probability trading scenario and a low probability trading scenario. And trust me, folks, that's one of the most important skill, because if you are looking for a trade every single time, you are like forgetting the fact that price will not be high probability with your model all the time. Now let's talk about the turtle soup that I mentioned here. The turtle soup didn't happen, and that's what I was trying to show you guys, that when dollar is consolidating like this, if you are expecting to see price respecting a PD array, it won't respect that PD array. What price will do on our pairs, like on NAS, it will go for swing high, swing low. That's how it will trade. Or it will just chop around ES like this, like it's doing on ES. So in a scenario like this, there's another gem I'm gonna share with you guys for free. These are very important gems, okay? And in your everyday trading, you will see this kind of scenario, and people don't talk about it even when they know it. When will you expect to see the consolidation phase get stopping? Now who can answer me that, right? Some of you guys have more experience than me in trading. Like suppose I've been trading with ICT for 2 years now. Before I was trading with retail concept for 1 year. Overall, with my experience is 3 years. And some of you are here for like with experience of 5 years, 6 years. But these are the important fact. No, not high impact news. It's very easy, folks. Because today we don't have news, and we are looking at where 3-minute chart. So we don't need news to like there's another logic. It's very simple. I'm gonna tell you guys. When you see price consolidating on ES like this, and it's also consolidating on dollar, when we will expect to see the consolidation phase getting stopped? You will see on your own pair, like suppose ES. Either 3 of these pairs will show you a clean delivery, like here. This is something that I will teach you guys today as a turtle soup model. So when we will expect to see this consolidation phase getting stopped or broken, when price delivers liquidity to one sided. As long as price is consolidating inside this PD area, this dealing range from this swing low to this swing high. Okay, we are not looking for a trade. We are gonna learn today, and that's where we're gonna focus. And we're gonna learn from price, what price is showing to us, folks. So it's only for the people who are not looking for a trade today, who are open to learning today. So this is what dealing range high. So what I'm trying to show you guys, that if price is trading inside this dealing range and chopping around, that's the time when you will expect to see a longer consolidation phase. As soon as price delivers liquidity to either one of these sides, you will see speed in delivery. What is this? This is high resistance liquidity run. Makes sense, folks? It's very simple to understand, and I'm trying my level best to make it to you guys clear. This is what? This is high resistance liquidity run. That means what? When we are seeing high resistance liquidity run, price will chop. It will generate strong liquidities for us, right? These are signature from price, that where price will come back after clearing out one side of the liquidity. What do I mean by that? So suppose, okay, let me mark it out, dealing range low. So if price is clearing out this, come on, if price is clearing out this equal lows first, or delivering towards sell side liquidity first, then what you will have to do, find out a higher time frame PD area near to here. Okay, price will not just get support after it clears out these equal lows. Price will have to have a logic, a PD area why price should move towards buy side liquidity. So if you see price clearing out these equal lows, you will expect to see price moving towards these equal highs. Okay, why? Because we still have so much clean price levels to deliver liquidity. Makes sense? These are what? Equal highs. These are also trend line liquidity as well. So see, it's so simple. It just requires patience from your side. So if price is clearing out equal high first, then what it will have? It will left these equal lows, and that's what? These are signature from price. Price itself is showing to you how it will deliver next, and that's how you decide the bias. That's how you get the narrative. There's another gem that I'm gonna share you guys. Now you are seeing high resistance liquidity run. So when will you expect a clean delivery like low resistance liquidity run? So see, I'm gonna show you guys the low resistance liquidity run, how it looks like. This is low resistance liquidity run. Like, what is this? Price is getting to a PD area with speed, with less candles. And what are you seeing here? High resistance liquidity run. So I got a question from average to savage. Why do you call everything equal high or equal low? Where did you heard me calling everything equal high or equal low? I'm only calling them equal high when they are basically equal highs, right? What is this? These swings are relatively equal to each other. See, so this is what? Low resistance liquidity run. And this is when will you expect this scenario in here? Right? Do you know that? Do you even know that? Like, you are seeing a high resistance liquidity run, but do you know when price will deliver liquidity like this? So there are a couple of two gems that I'm gonna share with you guys. Like, you won't see anyone talking about these kind of scenarios. So I'm gonna take you guys on 3-minute chart again, and I'm gonna write down a couple of stuff. The folks who are patient, be with me, and today we will learn. Okay, today we'll learn from this kind of price action. We're not gonna look for a trade. If we are seeing a trade, we're just gonna test it out if this is working. We are not gonna take it on our real funds, okay, on our main accounts. So what is this? When will you expect to see a dealing price becoming low resistance liquidity and delivering with speed? When price is delivering liquidity to one side of these, when price is clearing out, basically like if it's clearing out these equal lows first, after that the delivery you will expect it in low resistance liquidity run, and that's when you know when price will deliver liquidity with high resistance or with low resistance. Make sense? It's very simple, folks. Look here. Price is delivering liquidity with high resistance liquidity run. When will you expect to see price delivering with speed? When price clears out either one side of the direction. Make sense? It's very simple. So we'll keep an eye on this scenario and we'll put an alert here. And I'll also keep an eye on DOW 1 minute and dollar 5-minute chart basically. So look at dollar, folks. The same logic. If you understand the fact that how price generates and delivers liquidity, then that's it. That's all you need to learn. Okay, these are the DOL. It's so easy to understand. So what is this? Now tell me, where can you expect to see price going like with speed? Where will you expect to see price going with speed? Yeah, I'm gonna move to NQ, folks. Okay, I don't look for trades every single time. I'm only gonna look for trades when I believe, okay, that time is important and time will make that trade a high probability. See, that's the difference between you and me. You look for trades all day in every price leg. I don't do that. If I'm seeing a low probability condition, I'm just gonna demo trade it, or I'm just gonna like tape read it. I'm gonna rely on gaining more experience. So this is what equal lows. So again, the folks are telling me that what I always see. Yes, because that's my model. That's the target. If I'm looking for a trade, I will always have to find out the target first. If I don't know where the breaker will deliver, then why should I take that trade? Isn't it gambling? When I have targets as well with my model, that's when I believe that, okay, my model is becoming, or that trade is becoming high probability. Right? So this is what? This is our dealing range. So we are also expecting to see a rejection. Why? Why we want to see a rejection lower? Because we have so many breakers here, right? So we'll mark that out. And what's gonna be our last line of defense? That's another thing that I always focus on. Like when you will see me pointing out a concept or a model, you will always see me pointing out a price level that I will mark as last line of defense. And last line of defense means what? Can anyone let me know in the chat? I already explained it multiple times, I believe like 10 times yesterday. So let me see like who from here is more attentive in learning. Right? If it's like one person, then I'm happy with him. That's it. Yes, it invalidates the trade. That means what? If price is going above our last line of defense, if we are expecting a bearish scenario, that's the time when we will know that price is not gonna respect our plan, or we will have to adjust our plan. Make sense? So how can I find the last line of defense here? It's so choppy, right? It's very easy, folks. Look at these breakers. This high of the breaker is gonna be our last line of defense, and especially this, if price is coming up to this fair value gap, because look here, folks, these are signature from price where you can know where price will deliver and where it won't, and what you can use as last line of defense. We don't want to see price coming back to this fair value gap. And do you know why? Because look here, price coming up, right, delivering buy side liquidity, then price is going down, delivering sell side liquidity. So this is what? This is a balanced price area. Price delivered both sides of the liquidity here. So we will not expect to see price coming back up to this fair value gap. There's another question. can be made from you that how am I gonna know, HYDRA, that fair value gap or this fair value gap is gonna be turning out to be an inversion? There's many ways to know, but this is one of it. When you see a balanced delivery like this, you will not expect to see price getting rejection from like most of the time you will see price making it into an inversion. Make sense? So this is our fair value gap, and our last sign of defense is what? On dollar is the high of the breaker, right? So we already found out if price is going above it, we are not going to expect to see a rejection to our sell side afterwards. Price will go above this swing high. And that's it, folks. We need to know that much, because if we know where dollar is going to deliver on 50-minute chart, it doesn't matter how small the delivery is. We will able to find out a good trade on our Nasdaq chart, and it will deliver either 1 hour or 2 hour. And I'm happy with 2 hour. Even with 1 hour, that makes money, right? So this is our last line of defense. So are you guys learning from our stream so far? We already started. It's been like only 30 minutes we are on stream, so we have a whole day left to learn more. So see, I enjoy learning. I'm always a student of chart. Are you a student of chart? Are you guys enjoying the learning? Because what I'm teaching here is not on hindsight. I'm teaching you the real fact. If price is doing that inside this price level, what it will do afterwards, right? And that's what you won't see most of the mentor teaching. They will deliver lecture, but it's gonna be on hindsight. So again, okay, we have what did I told you guys? When will a order block, when an order block is gonna fail? I shared with you yesterday. I even talked about this today, and I'm gonna show you guys again, and the same scenario is repeating here. So if you go on my Twitter feed, you will see that this is what I shared, and this is what I shared yesterday as well. High probability fair value gap, bullish equal low above. Okay, if I see a scenario like this, I'm gonna tell you guys, but I'm spotting a scenario like this. How to know a PD area will fail? It can be an order block, it can be like breaker, or any other PD area. So if we are expecting, like, suppose price gonna get support from a bullish order block, then we don't want to see that bullish order block having equal lows below. Makes sense? It's very simple. If we are expecting to see price getting resistance from a bearish order block, then we don't want to see that order block having equal highs above. Now I'm going to show you guys that scenario on chart. And for that, I'm gonna take you guys on DOW. So what do you guys see here? What is this? Like, don't be like, okay, HYDRA is showing it on 1 minute, but I'm gonna trade on 5-minute chart. The same signature will repeat on higher time frame. Even on monthly chart, you will see it. And that's what I always tell you guys, that if you know how to read price, it doesn't matter what time frame you are trading, because our model is like that. We only look for setup when we are inside certain time periods, when we believe price will deliver with liquidity. We just need the missing part is DOL, understanding where price will deliver next, right? So why this order block will fail, right? See, we don't expect to see price coming all the way down, then closing a candlestick body below the order block. If price is doing that, then that order block is becoming a breaker, right? And we'll expect to see price going even lower. And do you guys see the fact what I told you guys, that these order blocks will fail? Why? Just be a little bit more careful when I talk. So these are equal lows, and equal lows are coming below what? This bearish order block. Now look at price, how it's gravitating towards this equal low. I told you guys that today is gonna be a low probability day. That means what? We will see more high resistance liquidity run. So we'll avoid trading, but we will open ourselves to learning, right? Because if we know how price is becoming low probability, and if we can spot that, we will also be able to avoid or distinguish between a low probability scenario and a high probability scenario. That's a very important skill, folks, and I believe most of you are here to make a a long-term journey on trading. Like you want to make your passion, you want to make it your job, your full-time job, and that's what you want to do. If this is what you want to do, you should be learning everything about price. And there's no better stream than mine where anyone can talk about the fact that I'm talking here. So we got equal low. That's why we'll expect to see these order blocks failing. See, even we have equal highs. So what price can do here in two scenarios, as this is a low probability condition, I'm expecting to see price clearing out these equal lows first. And if price is clearing out these equal lows first, we have what? We have this fair value gap here as well as this BPR, right? So look closely here how I'm marking this fair value gap. So there's another question, folks. Like every single time I see something, it's like I want to talk about that, and I'm gonna do that today. Okay, I'm gonna share everything. So why am I marking this fair value gap like this? Like usually that's what you guys do, right? Mark all of it. Then why am I marking only this part? How am I gonna know, HYDRA, from which part of that fair value gap price will get support if it's a bullish fair value gap? That's how you know. And you will have to align some logics with it. Like look here, I'm gonna zoom in a little bit more. What do we have here? We have a wick, right, in next to the fair value gap. That means what? This part of the fair value gap is where we don't want to see price trading. If price is trading back inside this part of the fair value gap where we have a wick, we'll expect to see price going even lower. Makes sense? And as well as we have a BPR at this price, so this price lag is not balanced. See, there's no trading here. The price itself balanced this much area on this fair value gap. See the delivery here, we have a bullish delivery, then we have a bullish and the bearish delivery as well. So this part of the price is balanced, right? So how can you use it in your trading? If price is coming down towards this equal low, you will expect to see price moving even lower. There's another scenario, okay? So I'm telling you guys how I trade, how I see chart. If price is clearing out these equal highs, we will have a high probability expecting price coming lower. Why? Because the same scenario that I told you guys here is repeating here. We just don't know how to see it. See the similarities here? What is this? Equal highs, equal lows. Same kind of scenario. Repeating on 3-minute chart, repeating on 1-minute chart. See the correlation? What you will wait to see here? You will wait for price to see which side is delivering first. That's what you don't know, and that's what you don't try to know. It depends on the price where it want to deliver first. Okay, but after it delivers that liquidity, price will show the path to you where it want to go next, and that's when we can have a trade. Make sense? So price hit the breaker again on dollar. So what am I gonna expect on dollar? I don't see any trade idea on Nasdaq, so I'm not talking about Nasdaq right now. We'll expect dollar to move up here and then show a rejection. This is our high probability area from where we can expect to see a rejection towards sell side. Okay, now to you it may be not clear why this is a high probability area. I'm gonna take you guys on the lower time frame. I'm gonna show you guys why this is a high probability area. Let's go to the 1-minute chart. Same logic, folks, same logic again and again and again, and this logic will make us hell of a lot money that will help us to quit our job forever. And that's what I did. That's what I did, and I got my freedom. And trust me, folks, freedom tastes like so good. If you don't have it, if you are not experiencing it, you won't understand the sweetness of it. Like today, what's the temperature outside? Let me check. I didn't even check. What's the weather? In Montreal, it's 2 degrees and it's raining. It's super cold outside. The weather feels like -8. Like actual weather is 2, but the wine making is so cold. And I remember back in 2022, I was going to work. I was leaving for work at this time, like to do 8-hour shift in this cold. And today I'm not doing it. So it doesn't take much time for you to change your whole life's future, right? So just that's what I'm trying to show you guys. Just focus on the part that will give you the progress faster, right? You want to get there faster. So that's what I'm showing you guys. I'm shorting your journey in trading. If you are trying to find it out on your own, yes, you can do it, but it will require a lot of work. So why this PD area is a high probability PD area? Because we have what? Equal highs here, right? Do you guys see the logic here? So now we can expect to see this breaker working out. So keep an eye on your pair as well. Mark the PD area the way I'm marking. And do you guys see the power of understanding breakaway gap? Like the folks who just left, I saw that there are 600 people, more than 150 people left when I told them like I'm not gonna look for a setup today. So those are the people who are not eager to learning. The folks who are eager to learning, we know that how it will benefit us, right? So why this fair value gap is not getting filled? What do you guys see here? A balanced delivery with wicks, right? Makes sense for why price should not fill this fair value gap. Because look here, folks, price basically like delivered to filled the fair value gap here all the way towards buy side liquidity. And again, if we are seeing price trading inside it, that's what we won't see most of the time. When I'm saying most of the time, the ratio is high, 60-70% of the time. If you are most of the time when you see a scenario like this, price will not come back to that fair value gap. But if it's coming back to that fair value gap, you want to see an immediate rejection, like price tapping inside and it's just rejecting immediately. Make sense? Now, when will you expect to see price coming back down here? That's something we'll also have to know, right? Once price takes order from our high probability PD area. This fair value gap is high probability. So see how this fair value gap turned into a breakaway gap. And see, we are not learning in hindsight. We are learning with real price action. Make sense? Are you guys enjoying so far? So this is what? This is our internal buy side liquidity. These type of streams that I'm doing recently, folks, these are types of streams that I'm gonna do inside my mentorship, and you are getting it for free. And not only that, I'm teaching you guys this, I'm like showing you guys how it will behave, how price will behave in real time, right? So this is our breakaway gap. We'll not expect to see price coming down here before price hits this fair value gap. This is our high probability target. Once price hits it, we'll expect to see a rejection towards sell side, and that's when we will know the price will trade back inside this fair value gap. See, it's easy. It has always been there in front of you, but you never saw it. But now you do. And I'll continue to stream throughout the whole month of January, every single day, and we will learn like this. So what happened here? See, we are learning more. Dealing range, price cleared out these equal lows, and that's what I told you guys that we wanted to see. Now, don't forget the fact that we are not done yet. We will have to go on higher time frame, and we'll have to find out what PD area price can get support from, and what higher time frame can you use here. Most of the time I'm using like 15-minute because that's like the bellwether chart for me. I'm not trading for the whole day, so this chart specifically gives me the bias where it want to deliver at next macro. So this is what our rejection block. So let's see how price behaves. Inside here, price already delivered so much liquidity. And how will you know with high probability price will move towards buy side liquidity? If price is offering sell side liquidity down here. How to be better at monitoring two pairs with only one screen. I'm gonna share that tip as well, because when I started my journey I only had one laptop, and that was like a $700 laptop, like so cheap. But today, alhamdulillah, I can afford any laptop, and I'm basically like bought what I would have never thought buying if I had a job. So now we will expect to see, okay, sorry, I forgot about talking about ES. Like, look at the high probability scenario here, folks. Price got rejection from this order block, right? So all you have to do when you see a scenario like this, you will wait for price to clear out one direction, then hit the order, find out what PD area price has on higher time frame here. Right? So this is the order block. We found out a bullish PD area. Now we will expect to see price going higher. It would have been better if, like, suppose price came down and hit these rejection blocks. But again, these are the things where you get nimble. You let price do its thing. And how will you trade it? In a good day, you will enter exactly like right here. This is a turtle soup model, folks. You guys believe that taking a turtle soup entry is so hard. It requires so much experience. No, it just requires the fact that you will have to look at where the turtle soup will form. And so you guys see the rejection here. This is an aggressive entry. When you don't have experience, how can you trade? How can you take a safe entry? Every single time I see a trade, I will always show you guys what's the safe entry. That means what? When you have less experience and you are fearing the trade, you are doubting the trade, that's when the trade itself, the price itself will confirm you are in the right direction. What is this? This is something that I taught inside my 3-day workshop as a inversion at SMR. I'm not gonna go into details, but when you see an inversion like this, that inversion gives you bias, that inversion gives you narrative, and that inversion as well provides you the safe entry. And yesterday you guys saw me doing the same stuff. Safe entry, right? So you can either take an entry here. That's what I'm gonna teach you guys today. If I'm feeling good, I'm gonna drop a plus turtle soup model lecture video today, and that's where I'll take you guys and show you guys these kind of scenarios. And again, remember, this is your safe entry. If price is going above it, that's the time you will know price will move even higher. That's the time you will know that these order blocks will fail. These are just the part of time distortion. Again, this is what I already taught you guys. When an order block has equal highs above, that order block will most of the time fail. Not always, okay? Don't believe like always it will fail. There's always a probability for us to lose that trade, get wrong in our expectation. So also think about that. But when price forms an order block with equal highs like this, it's a high probability for price not to respect this kind of breaker. Again, on DOW, we have another trade idea that you can see inside 850 to 910 macro. So see how I'm spotting the setup, and I'm not gonna take any of it because I don't care, folks. I have a skill that I can use every single day and find out the trade, and that's what I'm showing you guys. Yesterday we had 8 winning trades, folks, in a single day. We own more than we lost. Our ratio was like 60% of winning trades, right? So we only need like 40% to turn out to be profitable, but we had more than that. So see, this is a scenario right here. So this is our breaker. I'm gonna look for a trade inside 920 to 940 because that's the time I believe, even the day, if the day is low probability, 920 to 930 delivers liquidity beautifully. So safe entry got activated, right? So how can you take the trade right now? I'm highly gonna recommend you guys not to do it, because this is a low probability scenario. You will put your stop loss below this candle's body and you will target like all the dealing range high. Make sense? The fact that I called market from lower, do you guys remember me telling you that if price is coming down, clearing out these equal lows, it will move higher? Didn't I tell it like when price was here like 10 minutes ago, 15 minutes ago? So see, how did I expected that? That's what I'm teaching you guys, experience. I'm transferring my experience to you. So we got our breaker, and we'll expect to see price getting support from it. Just tape read it, okay? Don't be impulsive, don't take it. I'm gonna stream for throughout the whole week today, folks. So we'll have more trades, and today is a day when we shouldn't be trading. So a high probability scenario on Dow, right? So price coming back down to this breaker here, and what we will expect now, price to get support. We also have an order block here, so this order block is gonna be our last line of defense. So let's see what price does here. So see, when I told you guys a safe entry, how will you know that it's a safe entry? When price closes a candle's body above this fair value gap. Do you guys see any closure of a candle's body? So this is something that you will have to be patient to see it. If you are impulsive as soon as price trades inside here, you are not there. You are not there, bro. Okay, you will have to wait to see how the candle is closing. There's gonna be always a trade idea. If you are missing a trade idea here, you can always take it from this order block right here, because this is also a breaker. So see, don't force a trade idea, because the trade idea is always gonna be there. Do you guys understand the fact? We will wait for this candle or a candle to close above this inversion, because this is the last line of price where it can get a rejection, right? If this rejection level is turning into support, price will continue going higher. Why it should go higher? Because we have equal highs. We have a breaker, and as I told you guys, when you are expecting support from a breaker, that's what you don't want to see. Price forming equal lows. If price is doing that, that's when you will know price will retrace lower, and you can take a better entry by looking at chart like this. And look at the dollar. We are getting right into our calling again and again today. So what is this? Fair value gap, right? And what did I told you guys? This is gonna be our high probability area from where we will expect to see price rejecting. If price is not respecting this, then we'll expect to see price going higher, and we'll look for trades accordingly on our chart. But if price is respecting it like this, we'll expect to see price going lower, as we have high probability targets to our sell side. So keep an eye on these pairs, folks, and also keep an eye on Dow as well, because a high probability scenario is repeating here, but that doesn't that doesn't prove the fact that you should be taking that trade. So what price did here? Price cleared out the equal lows, and now we will expect to see price moving towards buy side. But today, again, low probability scenario. Look at the candles, folks, right? It's so choppy. Like, you want to look for a trade here? I'm not. I'm only open to learn more. So this is gonna be our last line of defense. This order block basically like failed, so let's expect to see how price reacts inside this volume imbalance. And now let's take a look on Nasdaq. I'm gonna take you guys on 15-minute chart on Nasdaq, and I'm gonna show you guys a PD area from where we can confirm price will move towards buy side liquidity. What's the live stream timings in the mentorship? Is it the AM session? I believe probably we'll do like whole session, AM, PM as well. So the starting time will be 8 AM, because we'll have, that way we'll have most of the macros to tape read or look for a setup. And you guys will have a good idea from what time you should be looking for a trade, right? So this is gonna be a part of our mentorship. We'll do 2 days of stream inside mentorship, and we'll do like a whole day inside each mentorship. And also we will also take trades, and we'll see how many trades we win and how many we lose. Our target is gonna be to make more profit than we lose. That's our target. So the order block failed again, right? The hourly order block that we have here, and price generated so much liquidity towards buy side. And as I told you guys, 9:30 will deliver liquidity. If we are not seeing, okay, so look here, folks, I'm gonna share another gem with you guys. This price action happened when you will expect 2 times for price to clear out equal highs. The first one is at 8:30, and like basically from our 820 macro, like here. Did price cleared out the equal highs? No. Now look, listen to me carefully what I'm gonna tell you guys here. If price is not clearing out that equal high or equal low at 830, it will clear it out at 920. Make sense? If price is chopping around 930, price will get clear at 950. Do you guys see the logic? I'm gonna take you guys more deeper and tell you guys why price is doing that. Price, it's very simple to understand, folks. Price is building order for 930 delivery. We know what 930 brings in the volatility, and 930 delivery will deliver like hundreds of ticks, right? So that's the time when we expect to see volatility. That's the time when we'll know price will move towards one direction with speed. And if price is moving towards one direction with speed, then these are the liquidity levels price will hunt for. And why price did that, like left these liquidity levels, I answered it already. Price itself is building orders for 930 delivery. Makes sense? So we have a fair value gap here. We'll expect to see price going below this swing low, because this is okay. This is a, is it a SMT? So this low, I believe it's SMT. If it's a SMT, this fair value gap will fail. Let me check, folks. Let me check. 50-minute chart. I believe it's SMT, right? Like look at here on Dow. Sorry, ES. Even on Dow, price cleared out the equal lows. Now see the delivery. This is what I'm telling you guys, not to take any trades because of this. The signature that we seek in price, the precision, it's not there today. And we'll have to understand the fact that not every day is a trading day. So if it's a SMT, folks, down here. So that's another gem for the folks who don't know. When we will expect to see a fair value gap failing or a PD area failing when we get SMTs like this. That's the time when you will know this fair value gap will turn into an inversion. When price was trading here, I told you guys that if it's a SMT, there's a higher probability this will turn into inversion. And look at the time. When is price moving towards buy side liquidity? When did price form this SMT? Our mentor tells us what? Time is the most important factor of our trading. Why? Because of this, price will show you what it wanna do at 9:30, how it wanna deliver that 9:30 opening price before, by building liquidities like this. So the SMT formed when we got inside 9-10 period, right? So price is doing what? Price is preparing the orders for 9:30 delivery, and based on this logic, we'll try to determine where price is gonna go next. So what's gonna be high probability PD area here? Do you guys see a BC here on hourly chart? Yes, this BC we will expect to see turning into inversion, and that's the time we'll have a high probability trade idea. So now we will use to expect to see this one turning into inversion, because this one already failed. This is an inversion right now. So this is a bullish fair value gap. Price didn't respect it, so that means what? We got a inversion here. We also got SMT down here. So that's when you will know that that equal low is not gonna get cleared out. So this is an inversion that will confirm us that the market structure shift happened. You don't need price to go above a swing high or swing low to confirm the market structure. That's the old theory. That's like for noobs. We rely on PD areas, and the PD areas itself confirms us the market structure shift. I already did a deep lecture about this inside my mentorship. I basically like taught them how to confirm market structure shift with a fair value gap, with a failed fair value gap, basically with an inversion. How to confirm market structure shift with a failed order block. Make sense? Probably don't, because you won't heard people talking about this, because it requires real experience, folks. the SMT is on lower time frame. Drop down to the lower time frame where I showed you guys the 3-minute chart. Look at ES went below a 3-minute swing low. And if I take you guys on a 3-minute chart on Nasdaq, okay, I forgot to talk about it because this is something that you don't see here. Do we have any swing low right here? We don't. Even this is not a clean swing low. A swing requires 2 candles next to it above it, and we got 1 candle below it, so this is not a high probability swing low. So do you guys understand? If I take you on ES, the same chart folks, 3-minute, look here, price went below a clean swing low. So there are hidden SMTs like this, and that's how you do it, okay? And this is what will confirm us our market structure shift, folks. And how will we do it? If price is going above this inversion, that's the time we will know that this is an inversion. Make sense? The market structure shift happened. And we'll look for trade once price is trading above this inversion here. Okay. And we also got support from a breaker. And again, I told you guys that today is going to be a low precision day. Look here. We don't expect to see price going below the breaker, even the wicks. We don't expect that because this is where we will put our stop loss, right? And today price is doing what? Yes, price is going to deliver liquidity to our sell side, but price is going to get support from this breaker, but at the same time, it's not respecting our concept, our model. Precisely. So inversion, if we are seeing price going above it, that means what? Couple of PD areas that will confirm us that we are in the right direction of the marketplace. And the people who are telling me this is not a SMT, the way you see chart, I don't see it like that. I believe you already understood the fact that I see it differently, right? And I see the SMT like this. And the fact that I told you guys that this fair value gap on 50-minute chart gonna fail, and now you are seeing it failing, that proves that I'm right in the market direction. And how did I do it? When price was here, I told you guys that this fair value gap is gonna fail if it's a SMT. And there are many ways to confirm the SMT. You can do it with lower time frame as well. Like price on, if you are looking at 15-minute chart on ES and DOW, you will see that price didn't went below this 50-minute swing low. Then why am I marking it as SMT? Drop down to the lower time frame and you will see price doing multiple stop hunt below here. So that's how I do it. There are a couple of facts that you don't understand, but I'm proving it to you by calling it live and showing to you what price is gonna do next. And price is basically doing that. Right, so breaker, and as let's take a look on dollar, because now is the time to look at dollar. So this one failed, okay, right? This fair value gap, but this fair value gap was not our last line of defense. Our last line of defense is up here. If price is moving towards buy side liquidity, then this is the time when we will expect price going higher. Do you guys understand? That's why I always tell you guys, you will have to think in 2 ways. If price is doing that, then I'm gonna do that, right? And what I want to see is like dollar dropping. That's what I want to see, because Nasdaq has so much equal highs above. Do you guys see the fact that how price confirmed the market structure shift? And again, another example of a breakaway gap. Do you guys see a wick here? The folks who are telling me this is not a SMT, and where I did call the market higher from that SMT, I already showed you guys why it's a SMT. I told you guys that on 50-minute chart it's not a SMT, But if you drop down to the lower time frame and you match the chart, like 3-minute chart where I showed you guys, you will see price already did a stop hunt below a clean swing low on ES. Okay, and that's the fact that proving that this is a SMT. You can confirm a SMT by like this, by aligning chart with lower time frame. I took you guys on the 3-minute chart on Nasdaq as well, and I showed you guys that there's no clean swing lows. That price went below. I'm gonna tell you guys again, okay? I'm understanding that you don't know how I trade, so I'm gonna teach you guys, okay? So look here, this is not a swing low. Why? I told you guys before that a swing low requires candle next to it toward like above it, or similar like this. But what do we have here? We don't have it. And do you guys see a swing low right here? We have one here, right? The price went below it, yes, but price failed to go below this swing low as well. Make sense? If you don't want to call it SMT, don't do it, okay? Just that simple. We can still use other concept to confirm the market structure shift and stuff like that, where price is gonna move higher or lower. Okay, I don't need a SMT to confirm, okay, that's the time when price will go higher. But identifying SMT is important because equal high, equal low, trend line liquidity is our main model, right? So if price is forming an equal low and you were expecting to see price going lower, taking out that equal low, most of the time you will see, sometimes you will see price clearing that level out on lower other pairs, and it's not doing that on the pair that you are trading on. Make sense? So if you don't check for the SMTs like this, you will still expect price to go lower. So did I expect a price to go lower and clear out these equal lows? No, I told you guys that it's gonna go higher. And I even told you guys that from what price level it will go higher. I told you guys that this inversion will confirm our market structure shift. It's not criminal. It's okay if NQ is not clearing out that. I know it's gonna be hard for you guys, some of you guys, to understand, because that's a lot of years of experience, folks, and I'm putting it together in one lecture. Of course, you're not gonna understand it. Spend some time with me, see me calling the market correctly many times, reading price action, and after that you can trust this kind of concept. Okay, that's what I'm doing here. That's my aim. So we already got our market structure shift confirmed. We are trading inside our 920 to 940 macro. Now we'll be looking for a trade idea. I'm gonna talk a little. Look, this equal low, we want to see it getting cleared out. 920 to 940. So price cleared out the buy side liquidity. That's what I don't want to see, folks. Okay, I want to see if price is moving towards buy side liquidity and I have a buy side liquidity as target. Then I want to see this equal low, price clearing it out and then moving higher. Okay, when to expect a SMT? When you were expecting to see a breaker forming, always look for a SMT, because a breaker requires a stop hunt, and that's where price will form a SMT. Okay, what some of you are doing here is that you are telling me we still have an equal low and we don't have a SMT. And did I told you guys the price will go lower? No. How did I do that? Because I saw a SMT where you don't see it. Do you guys understand the fact? And where will you look for SMT? When price is forming equal lows like this. So there's one student of mine, her name is Rebecca. She asked me about the opening prices. So now we will use the opening prices like this. So this part of the fair value gap, we don't want to see it trading back here. And if price is going above a 830 line or above a 830 opening, the trade idea that becomes high probability is a short. But again, you will have to align your logic with liquidity levels. Where do you see the liquidity? Above here, right? So I believe if price is coming down here, clearing this liquidity level out, we will have a high probability trade idea. Why? Because that's what will show us that price already cleared balanced sell side liquidity and it has liquidity towards buy side that is left to be taken or left to be delivered. Makes sense? And now we'll tape read this scenario here. We formed a fair value gap and we have a breakaway gap here. So this part of the fair value gap, we don't want to see it trading. If price is trading inside it, we want to see price rejecting immediately. Make sense? And again, I'm not gonna take that trade because it's contradicting with the model that I teach you guys. I told you guys many times, and you guys already saw it, when we have a scenario like this, order block and a fair value gap below, sorry, equal lows below it, that order block, we'll expect to see it getting filled, right? So we'll just tape read this scenario. When the scenario becomes high probability, we won't hesitate to demonstrate it. Like here, if price is coming down at this level, that's the time when we'll expect to see price rejecting higher. Until then, we'll be nimble with our expectation, folks. So see the immediate rejection. We don't want to see price trading inside here. If this is what's happening and price is coming back down, that's when you will know that price will move lower, even lower. And what price did here, price closed the candle's body inside this week. So now I'm gonna expect to see price clearing out this equal low first and then moving higher. And what's gonna be our last sign of defense here, folks? To expect higher prices, because we also have liquidity towards sell side liquidity as well, right? This breaker is gonna work as our last sign of defense. See the delivery here? Last line of defense means what? If price is going below it, we were probably wrong identifying market will go higher, and we'll change our narrative and we'll see price going lower. So this is our last line of defense, because this gap is a breakaway gap and we don't want to see price trading inside it. If price is doing that, then the scenario is low probability. Another fact that I told you guys to look at, what is this happening here? Didn't you heard me calling the market exactly precisely from this low? I even gave you guys a safe entry, right? I told you guys that if price is closing above it, that's the time when price will confirm that it will move higher. And yeah, I also told you guys that if you are missing an entry even from here, the turtle soup entry, or even from here, don't get FOMO. There will always be a trade idea if you know where price is going. I told you guys, didn't I told you guys that this is gonna work as a breaker? What do you guys see here? I'm proving the fact that how I trade by each and every candle I was delivering. So did anyone learn from it? You are spotting it live. We are not trading today. Yes, Jai. Yes, Jai is saying you also told us not to take that trade. See, Jay, you are missing the fact that I'm teaching you guys how to read price action, and that's where I'm focusing, because this scenario will repeat again tomorrow, day after that. So why are you like looking for a trade today when you know you can repeat that skill again and again? Okay, so beautiful support towards buy side liquidity, right? And 930 delivered beautifully towards buy side. So see, the precision is not there, but delivery is there. Price respected this order block. And didn't I told you guys that I told you before 930 delivered that when we will expect to see these liquidity levels are getting cleared out. Look at the time now, 930. Space 10 Space 10 is saying, sorry bro, I took that trade. It's okay, it depends on you, okay? I cannot stop you from taking the trade. If you can risk the money, then do it, right? So far we had one good calling towards buy side liquidity on ES with a good entry and the setup. But here on NASDAQ, we expected to see price going higher. We even knew how far it will go from this inversion, right? So do you guys see how this inversion confirmed our market structure shift? Okay, like just look at the chat window, folks. Okay, we got a couple of people here who are always going to be looking for trades, and that's what I'm trying for you to not to do. See, EDD Jad is saying, to be honest, you just got me all confused. Had a buy right after the liquidity sweep and closed my trade cause you kept saying it needs to come into order block, etc. So come on, like, why? This is what I told you guys, that I believe if this is happens, if this is what happening, then I will take a trade, or I'll look for a trade. If this is not happening, that's not high probability to me. Make sense? And I told you guys that the fact that he typed it, that's the indication of what? That's the indication of FOMO. And I'm showing you guys that again and again, if you know how to read price, it doesn't matter what PD area you are trading, you will always have a trade idea. Understand it? So see, the folks who are open to learning, we learned so much today. We learned how to confirm market structure shift with inversion. We learned how to see a turtle soup model from this swing low, right? There are a couple of things that we understood today. Yeah, I know the fact that it's gonna hurt you that you didn't took the trade, but you will have to get out of that zone, folks. It's hard at first, at the beginning, but that's when you will mostly improve. The fact that I'm calling all these levels exactly when price will clear it out, that's where you should be focusing at. Makes sense. So we can still expect to see price going higher, and we got our breaker down here. So there are a couple of breakers that you guys can see here. So which one will I focus on? Okay, I will do always the thing that I believe is gonna be high probability. This breaker. And why this breaker? Like above it, like this? Because the fair value gap is coming right next to this breaker. Okay, we have a wick here, so we'll focus to see price getting support from this price area. High probability area is down here. Right, so see, price is not doing that. If price is not doing that, what I believe is a high probability, why would I get FOMO? I'm accepting the fact that today is gonna be like this. I'll get less entries, I'll get less precision. That's why I'm opening myself to tape reading. Make sense? It's very simple to understand. If you want to take a trade, do it on your own. Don't rely on my idea. Like, if you want to do it, then do it. But I'm gonna do the fact that what I believe is high probability. So price formed equal highs up here, right? So that's giving us another indication where price wanna move higher, like if price wanna move higher or not. And another thing is that I'm not looking at 30-second today. Day before CPI, I don't look at 30-second. I only look at 30-second when I believe the condition is high probability. I'll get a winning trade, and that's when I do it. So again, there's one guy who told me, like, I'm good at explaining, but I'm not good at identifying the setup. So see, these are the people who are not open to learning. I'm exactly showing you guys what to expect from price, and that's what giving you idea when to take a trade, how to take a trade, and where to take a trade. What is this? Order block, and above it, what do we have? Equal highs, right? And now that we see this equal high, we'll expect to see these order blocks failing. That's the high probability scenario. And the fact that I proved it so many times, even yesterday and even today. You guys saw it on DOW. I showed you guys an example. So these things works, but it's not 100%, folks. When I say that this is a high probability, that means what? That's a great deal of chance for price to do one scenario over another. But the gamblers, they want to be getting correct every single time. Okay, I don't do that. I'm not a gambler. I trade based on probabilities. When I have a higher probability over another, that's when I'm gonna look for a trade. That's when I'm gonna risk my money. I'm that kind of a gambler. And what you guys do, you guys will be like, okay, when HYDRA is telling us that this one will fail as we have equal highs above, so we'll expect it to fail, right? But you are missing the fact that nothing is 100% on chart. It always comes with a chance of getting wrong, right? So we had a great tape reading here on ES. Okay, so I'm not gonna focus on ES, but the price action is so better on ES, right? Price, suppose you took an entry here. I even explained to you why you should take an entry here, even before price even came down here. I told you guys, once price clears out this equal low, price will move higher with speed towards this direction. Didn't I told you guys? I explained every single thing. That means what? I'm explaining a trade, right? I'm exactly giving you a trade idea, but I'm also teaching you that there are some days when you will just be tape reading, and today is one of those days. So what do you see here? Price came down. So what was our rule? I'm gonna explain again what I told you guys, that we price delivered high resistance liquidity here, and I told you guys, when can you expect to see a delivery with speed, more candles, like less candles, speedy delivery, more points. That's the time I told you guys that when price clears out one side of the liquidity, price will move towards buy side liquidity with speed. That's the time we will expect to see price delivering with clean candles. And what do you see here? So here's another question that I'm getting: why tape reading than demo trading? Because when you are taking a trade, folks, okay, you are gonna think about the trade, what I'm doing here. Even if it's on demo, your subconscious mind will always want to win. And the benefit of tape reading is that you are opening yourself to two types of scenarios. Like if your price is doing that, then I'll do that. You don't get it on demo trading. If you lose, like suppose 3 trades in a row on demo, you trust me, if you are honest with me, you will feel like, okay, so angry, why price is doing that, and like, why am I losing so much? And you will lose the interest to learn, even on demo trading. That's why I'm not doing that. Tape reading opens yourself to see both sides of the marketplace, and that's how you learn, and that's how you get out of the zone where you feel FOMO, where you feel like revenge trading. Because you know, if price is not respecting this trade idea, I will have another trade idea by using another PD area. So see, price came all the way down, hit this fair value gap. Now we will expect to see price going higher. We also delivered equal lows down here, but still I want to see like trading inside this level. It would have been better like if suppose price left these equal highs and then came down. Yes, there's another fact, very nice fact that Mark shared here, that we don't trade for the sake of money. We trade for the sake of winning, like learning. We always open ourselves to losing, but we want to lose less and we want to win more. What I used to do wrong is like I always wanted to be right. I always wanted to see like if I have 10 trades, then I was expecting like, okay, if 1 or 2 trades is turning out to be a losing trade, I'm okay. But I missed the fact that it's not gonna always happen. Okay, price can
take me into a losing streak, right? And that losing streak can deliver liquidity, sorry, can deliver like 4 or 5 trades of losing trades in a row. So this fair value gap will also confirm our market structure shift, and once it does that, that's when we will know this is the breaker that will take us higher. And how will we do that? Now again, what I'm doing here, I'm teaching you how to read price, and I'm also teaching you how to look for a trade, right? So what's gonna happen here? We want to see price closing a candle's body above this fair value gap, and that's the time price will confirm us that this is a market structure shift that happened, and we will seek higher prices. Dollar went above our last line of defense, right? So not so precise on dollar. And there's another thing that I tell you guys, that when your analysis is clear on your own chart, the pair that you are trading, forget about looking on dollar. Dollar is just gonna make you confused. Like here, dollar is keep moving higher, Nasdaq as well moving higher. So do you guys see the correlation? No. So forget about dollar. Look here, we will have a good trade idea here from our own chart. We don't need dollar. And so far we had, right? We called the market higher, and we are still continuing to call the market higher. So what did I told you guys about this fair value gap? We'll wait for this candle to close, and if it was a good day, I would have looked for a trade here. And the folks who are watching me for a long time, they know what I do in a scenario like this. This inversion confirmed us that this is an entry here. Make sense, folks? So this is a part of our tape reading. We don't need so much drawing. And I told you guys that if price is closing a candle's body above this inversion, the breaker will get activated. And what do you guys see here? So I'm doing what? Yeah, out of macro. That's why we are tape reading. Wolf, we are not taking it. Today we are not gonna take any trades. Me personally, I don't know about you. So me, I'm not gonna look for a trade. All I'm gonna look for, I'm gonna open myself to learning more. In a day like today, when I believe the condition is low probability, when I believe my models will not work out, that's the time when I do it. So see, inversion activated the it showed us that the market will go higher, but again the safe entry was here when price was like, if price was closing a candle's body above the breaker, that's when we will have another safe trade idea. Makes sense? So there are more couple of things that you will have to align with chart. Makes sense? And see what I was told, what I was telling you guys about low probability. Do you guys see that here? Yes, it's just like price chopping. Price is gonna chop most of the time today, and it will have a condition like this. You don't know price will do that. I know because of my experience, because of the fact that I tape read and journal these kind of days. Again, we will wait for 950. This price action is not inside our macro, right? And the way our mentor teaches to see a order block, like suppose this is an order block, right? So what our mentor taught us is that price should not like go above the upper quadrant. If price is closing a candle's body above the mean threshold in the upper quadrant, you will expect to see price going higher, and that's when you will know that that order block failed. This is a bearish order block, right? So what happened here? Price even went up, activated the inversion, but again it failed. Makes sense? So we are not expecting price to come all the way down at this level. So as long as price is trading inside here, and I told you guys that our high probability entry will be from the breaker here. So let's see. Probably I'm gonna outline another setup to you all. You all get days like this when you lost most of the trade, when you lose most of the trade. Like suppose you will have a very good day where we'll win like 2-3 trades, and you will not even have a single losing trade. You will also have a day when you are losing like 4 trades in a row and not having a single winning trade. And the fact that you are missing to learn is that when price is doing that, when I'm losing most, look for the day, what day it is, why price is doing that, why price is not respecting my model. Because yesterday I saw price giving me 3 trades in a row, 3 winning trades, but today why it's not doing that. These are the days when price will do things like this. Price will won't respect our idea or the signatures that we want to see in price. Like here we had an equal low, right? The folks who are watching me for the first time, they don't know that this is what I expect, for price to clear it out and then move higher. This is what happens most of the time. If price is leaving these kind of liquidity levels, this will become a high probability target for us, for price. Okay, we're expecting bullish delivery, so we don't want to see price clear leaving any strong liquidity levels like this. We want to see price clearing it out and then moving higher. If price is doing that, that's the high probability scenario. So we had this delivery on at 920 to 940. What did you learn from here? You learned to confirm the market structure shift with inversion. You learned when we can expect to see price going lower, right? This was our last line of defense. You also learned the fact that how to expect a breaker to get activated before it actually does. So am I not telling you guys how to take a trade? Yes. So what did I told you guys? If this inversion is getting activated, this breaker will get activated as well. Go back and listen to this. And that's what the exact thing that happened, right? Overall our bias was bullish. So dollar is just consolidating. So when I see things like that, just avoid looking at dollar. So what is this? Equal low, right? So we are expecting support from this breaker, but price did what? Price generated equal low and left it untouched. And where you should be looking for a SMT at these levels. I'm gonna take you guys on ES and DOW. Do you guys see that they all form the same equal low right here on 1 minute chart, right here? See that means what? This is a high probability target. This is not a SMT. So what we will expect here, if price wanna go higher, our high probability condition is price clearing out these equal lows and then moving higher. Make sense? Now don't tell me like I'm not giving you guys I'm not teaching you guys how to take a trade. So again, if this is what price is clearing out, we are also inside our macro, folks. So we'll have a good trade idea to tape it again, okay? And this will have a high probability chance to win than losing. So this is what we are expecting to see. And what price did here, folks, this is something that I taught inside my mentorship student. Okay, look at the delivery, right? That when price is coming down for a PD area where you were expecting to see price getting support, if price is leaving that, that's when you will know that price is gonna move higher. So wait, see that? So this is why I'm not taking any trades today. So price hit the OT level right here, right? We still have a chance to look for a trade, folks. Look for a trade to tape read. So what do we have here? Now, how will you know that price will go lower? I told you guys that if price was clearing out these equal lows, then it would have been a higher probability. If price is leaving it, and if there's a SMT, even there's a SMT, price will come back to these liquidity levels. And basically like price came up and even respected the order block here, and then it went down. So this is what tape reading does to you. When you are trading, you are gonna be frustrated if you lose a trade here or here. tape reading, we only do it when the condition is low. When the condition is low probability. Makes sense? You done ICT private mentorship? No, I'm an ICT YouTube channel student, and all that I learned is from his YouTube, and that's enough, folks. That's why we don't even have to look at the charter content. Price again formed equal lows down here. So suppose if I was trading today, I would have taken a loss here because I would have put in a limit order here. But did I do that today? No, because I know my concept will not work today. And there's no shame to accept the fact, to say that when your concept is not gonna work. We all get a day when we lose most. You don't learn from it. I learned from it, and I identified at what days I'm gonna lose most than winning, and this is one of those days, folks. So I'm not taking any trades. I'm not opening myself to any trades. So we got an order block here. This is like a reclaimed order block. So from this level, we'll expect to see price getting resistance, and this level right here is gonna be our last line of defense. Again, I'm telling you guys what price is gonna do if price is doing this thing, or like suppose another thing. We are still trading inside our macro, so this is gonna be our target. Okay, equal low down here. This is a higher time frame equal low. Again, we want to see price rejecting from here because that's how I use reclaimed order blocks, and this is gonna be our last line of defense to expect price going lower. If price is not respecting this order block, okay, this order block will turn into a breaker, and again we'll have another trade idea to tape read. Make sense? Does it make sense, folks? See, am I getting FOMO? No. Why would I get FOMO? I will have losing trades. I accept that fact, but my strategy proved the fact that I will win more than I lose. And just count, like even when I'm telling you guys that this is something that we tape read, count that and see how many we are winning. We will always have more winning trades than losing trades. We'll make more money than what we lost. So see, again, so this is what order block. What kind of order block? Reclaimed order block, aligned with the fair value gap, and we had targets. So every single time I outline a setup to you and I call the market like supposed to a buy side or lower, I will always give you a target. Without a target, our trade idea is not gonna be a high probability trade idea. So what was the trade idea here? The person who told me that I'm not teaching you guys how to trade, like suppose you put it here, right, and you will target like 2R. The trade that I see, folks, it will always give you a 2R trade. Now again, you will tell me, HYDRA, you didn't enter here. But when price was trading inside here, I told you guys that this is an area of resistance. So what I'm doing, I'm identifying from where price will reject before it's rejecting. Isn't it a signal? Now see, where did price gravitated to? This equal low, right? This is where you will take a partial if you are expecting, like if your TP is here. And now here in this scenario, what's gonna be our last line of defense? Now that price cleared out this equal low, there's a chance for price to move higher because it offers sell side liquidity down here. This one with all these wicks, right, is where we don't want to see price trading. You want to see price respecting this order block, and it already delivered, took the liquidity from here. Makes sense, folks? So this is how I trade. Everything with logic. If price is coming up, like suppose price going above this swing high and then it's rejecting again, I don't care. I already got most of my profit down here. And I know some of you took it because again you were impulsive, right? You're not patient enough. But even when you took it, like you already got some money here, or these are the levels where you should be taking some money. So see, what am I telling you here? How to manage stop loss when you are a trade, when you are in a trade in a scenario like this, right? What did I told you guys? The first time when I identified this scenario, I told you guys that this is gonna be our last line of defense. Did price trade inside it? No. Last line of defense means what? I'm teaching you guys how to manage your stop loss. Then again, here, when price rejected from the order block, from this reclaimed order block, so let me mark that as well, because someone will come here and tell me, okay, this is not an order block, HYDRA. I know this is not an order block, this is a reclaimed order block. There's a difference the way you see chart and the way I see chart. So I still want to see price respecting these ones. We are still trading inside our macro, but there's another scenario that can happen, right? So suppose if I was in this trade, suppose I took entry here, I'm gonna put my stop loss now here. I'm talking to the people who already in this trade, okay? And I will allow price to come above this swing high, not going above this reclaimed order block, right? So suppose something like this. And even if you took something like this, you already got like a partial. So in a day like today, even taking a partial is, I see it as a good trade. I shorted it on 30-second inversion and sold 70% at 70 at swing low, and I'm done for the day. That's how you do it, Jimmy. That's how you do it. So he took that trade from 30-second. Okay, you took it from this inversion. Yeah, but the high probability was to take it from this fair value gap, because this is not a breakaway gap, right? So that's what I'm teaching you guys as well, the how to seek precision in your trading, how to get the sniper entry, and that's how you do it. And it's gonna be different from other ICT traders, folks. The way I trade is gonna be different from other ICT traders. Like just now, I'm also looking at like what Tanya is doing, because she so far been doing great. She took a trade from here, okay, and with the stop loss I suppose here, and she was targeting this weekly inversion, this line. Now, did I told you guys to take it? No, I gave you guys a high probability scenario, right? So there's the difference with me and other ICT student, that my whole model is based on the liquidity levels. I prioritize the liquidity first, then the model. I prioritize the DOL first. This was the high probability scenario for price, and if price would have did that, I would have told you guys to tape read another setup. So see, what is this? I told you guys that I want to see price coming down, and that's going to be high probability. If price is leaving these kind of liquidity levels, folks, price will come back to these liquidity levels again, and that's what we don't want to see. We want to be as high probability as it gets when you are trading, when you are taking a trade. And see, didn't I share another trade idea here with you all, explaining every single little stuff, right? What did I told you guys? That this is where I'm gonna minimize my stop loss if I'm in this trade. So what I'm doing, I'm teaching you how to look for a trade in a scenario like this. Now that price formed this swing high, I'm gonna put my stop loss here above this one. That means what? Less risk, more less risk, less emotion, right? And now I'm gonna target this swing low because price already cleared, delivered liquidity above a swing high, so we can expect to see price going below these old relative equal lows. So how can you prove me now wrong that I'm not outlining any trade idea? I'm not teaching that. So let's do a poll. And do I feel anything that I missed a trade here even though I saw it? I don't, man. Do you know why? Like, see what happened here? Exactly, price came to this liquidity level. I told you guys that this is where we're gonna put our TP, and this is the second liquidity level where we will adjust our TP to. So see, I'm not gonna get a FOMO because I have a skill that will repeat. I can repeat again and again every single day. So let's do a poll. Let me know how many of you guys are enjoying the stream so far. So I'm also watching Tanya, as I told you guys here. So Tanya identified a trade when price already moved lower here. She was tape reading like me, and this is what she did. But again, when did I told you guys the price will reject from here? Exactly at this level. Told you guys this is a level for partial. Price came up. I told you guys that how will you minimize your stop loss? Make sense? So see, there's always gonna be a difference because I seek the precision. Like, how can I perfect my entry? And that's how I basically do it. By opening myself to learn more and by tape reading a lot. We started our stream since 8 o'clock, and didn't I talk non-stop, and didn't I only talk about chart? You will never hear me talking about trash, anything outside of trading, because there's always so much to talk about, right? There's so much to learn. Every single moment, price itself is teaching us what it's gonna do, right? So I always have something to talk here. Like, suppose price delivered sell side liquidity here, right? So now HYDRA, can I take a trade from this breaker? No, you will wait because price cleared out most of the strong liquidity levels from here, right? We had a relative equal low down here, so price cleared it out. That means what? We don't have strong targets now. Do we have any equal lows here other than the swing? We don't. So we do not look for a trade when we don't have a target. All right, so this is our 0.5, the consequent encroachment of this week. So what am I doing here? When I see a week like this, I know where price will get sensitive. 0.75, that's what? The upper quadrant. What's the high probability scenario here? Price coming down to the consequent encroachment and then getting the support. See, am I not teaching you how to look for a trade? That's exactly that I'm doing. When you see a scenario like this, and you will see it every single day, there will always be a candle on higher time frame that will form a long week like this. So how can you trade it? That's how you do it. And we will not just push button as soon as price hits this consequent encroachment. When price is coming down to these liquidity levels, I'm gonna take you guys on lower time frame, and we will expect to see a breaker forming at this level. Make sense? So what are you guys talking here? ICT giving positive hits on Tanya. That's what I'm also doing. We're gonna do a collab very soon this month together. Okay, I'm trying to say to you guys is that the way I see chart is gonna be different from other ICT students. Okay, and you guys talk about like launching mentorship. You guys forget the fact that our mentor himself told us he made more money from mentorship than he did from trading. Oh, I believe you are not that attentive student, right? He talked about this in a Twitter space. So my man ICT, my mentor, he already made millions of dollars. And he himself is telling us that he made more than mentorship than trading itself. So why are you hating mentorship? It's just because people are jealous, okay? Like, it's just that you can do it and they can't. But the fact is that we are here for money, okay? So if I can do it and if people want to learn from it, then why not, right? And our mentor also gave a criteria to open a mentorship. Like, if you can do this kind of stuff, then open a mentorship, like proving the fact that you can read price, you can call market consistently. And I'm doing it every single day from in front of you, explaining the trades tick by tick, what price is gonna do next or afterwards. So again, we are waiting, right? So see, I told you guys that this is not a level from where we will take a trade, but again, I see a trade here. Okay, that's why I don't want to divert myself outside chart, okay? Because if I do that, I'm probably missing a trade idea that I should have identified for you guys, and we're missing a chance of learning. So if you have any complaint, like, just don't watch it, okay? So what do we have here? A breaker and then a fair value gap. And I told you guys that not to take a trade from this breaker. If you were taking a trade from this breaker and you are putting your stop loss right here, do you even getting one and a half hour? No, it's not even coming to 2 hour, right? So this is what experience does to you. Why did I told you guys not to take it from here? Because we don't have high probability targets on higher time frame. For price to come to a level, it will need high probability liquidities like this. And price basically offered sell side liquidity down here, and we have another high probability model to taper it, folks. Okay, this breaker up here. So see what I'm doing, I'm distinguishing between a low probability scenario and a high probability scenario. You didn't heard me telling you that I'm gonna take a trade here or looking for a trade or taper this. No, this is a scenario that a high probability will fail, and it failed. Now we have another scenario that has high probability to be correct, and from this breaker here. Okay, but I still need more confirmation. I'm gonna wait. Okay, so now I'm only looking at Nasdaq. Basically, look at dollar, it's just so choppy. So as I told you guys, when we have a clean idea where price is gonna go, just don't look for a trade, right? So we are trading inside our macro. So the condition itself is already low probability, and now it's more low probability. So we are gonna open ourselves to tape reading. Do you know Day, Ivan, Brian? Yes, I know them. Do you use Bookmap as well? Do you ever saw me using Bookmap? I don't do it. So price went above the 930 and 830 opening price. So price itself is confirming to us that it's a high probability scenario for price to move higher, right? That's why I told you guys that this is a high probability scenario over what we had here, a bearish breaker. And we also got a breakaway gap right here. What is this? A breakaway gap, right? So again, if it was like inside our macro, I would have told you guys to see something like this with a stop loss, like suppose below this fair value gap, and like targeting like 2R from here. But again, this is not inside our macro. So trading itself is more about patience than looking for a winning trade, okay? So do you guys see how to distinguish between a high probability scenario and a low probability scenario? That's what I just showed you here. So I hope you understood it. Why taking a trade from this bearish breaker was low probability. I'm going to explain myself again. We do not look for a trade when we don't have a high probability target. Right? So did we have any high probability target here? No, we didn't. Price basically cleared out most of the sell side liquidity that we had as a strong liquidity, and after that, that's how I knew that this is a low probability condition, because price will not move towards one direction without these points, folks. Equal high attracts price like a magnet. Dow is looking better to you? Come on. Like, look at Dow, what Dow is doing here. And look at NASDAQ. Through the whole month of January, I'm going to focus on NASDAQ. I'm going to shift my focus on Dow after we are done with trading January. So now we can expect to see price revisiting this weekly inversion, okay, folks? So now let's see what price can do and focus on the things that I'm telling you guys, that when price went above this 930 and 830 opening price, right, I told you guys that we are heavily bullish now, and that's how price confirms what it wanna do next, and that's how you can minimize your stop loss more, right? So suppose, what am I telling you guys? I'm teaching you how to look for a trade and how to minimize your stop loss according to the price delivery. Your original stop loss would have been right here, but how will you get the confidence to minimize the stop loss? Because these are what, 830 and 930 opening price. Price itself confirmed us that it's bullish, it's heavily bullish, it should move higher, and we have target up here, right? And we even have a higher time frame target. So this is the time when you minimize your stop loss. Like suppose here, and this gap, didn't I told you guys that this is a breakaway gap, right? So see, this should not be getting filled. So if you are not fearing the trade, you can always put your stop loss at break even, and that's what I do. Make sense? If it doesn't make sense, like if you guys have a question, then don't hesitate to ask it. Breakaway gap. So this whole fair value gap is not a breakaway gap. This part of the fair value gap is the breakaway gap. We have a wick, we have a fair value gap, and the wick is covering that fair value gap. So we can allow price to visit inside here but not go below it. Could you please explain breakaway gap? I already did, entry multiple times, even yesterday and even today when I started the stream. And I'm gonna take you guys on 5-minute chart. And what do we have here? We have an inversion, right? And this is where price changed its delivery. So we want to see this inversion right now working as a bullish inversion. We have target up here. We want to see price delivering and going to this level again. And now that I've dropped down to the 30-second chart, folks, okay, we are getting close to a macro, and these are the times when we look for a trade. Price went below this swing low, so this is another entry level, folks, okay, something like this. I'm tape reading again, so we are gonna put our stop loss below here because we have a breakaway gap and this should not get filled, and this is gonna be the scenario. I'm not telling you guys to take this trade, so don't do it. It just, I see a scenario and we're not yet the macro itself, okay. 1020 is when we will have a good macro. That's when the macro starts, and that's when we will be looking for a trade idea. So see the rejection from here. Now wait, we are still not inside the macro. The high probability macro, like the delivery itself, becomes high probability when price is at the middle of a macro. That means what? 1030 is when you will see more speed in price delivery. Makes sense? So the more we get close to 1030, the more our trade will become high probability. It's the same for any other macro. If you are trading 930 macro, you will always keep that in mind, that you want to take that trade before 930. So the more price gets close to 930 and you see your pattern forming like a breaker, that's the time when you will know that your trade idea is getting more high probability. So see, 1020 and price generated more and more equal highs, but again chopping around towards this part of the price, right? So we'll just tape read this setup, folks. We know what we are doing already, right? Price on lower time frame generated equal highs, so leaving price itself is leaving signature that it want to move higher, and we already have a high probability target up here. So let's see what price does. Price already, look here, where did price stopped? Inside this fair value gap, at this part of the fair value gap, right? Price went near to this breakaway gap, and that's what you don't want to see. Okay, price trading inside here, that makes our condition low probability. If you see price trading inside here, you want to see price rejecting from these levels again. But again, when price is doing that, trading inside the area where we are not expecting to see price trading, that condition becomes low probability. Overall, the whole day is low probability. But again, we are focusing on learning. And do you guys see that? What trade idea did I told you guys is gonna be here? Entry here with a stop loss below this fair value gap. On 30-second chart, we had the order block, so below this order block. So do you guys now see the logic? Am I not teaching you guys how to take a trade or how to look for a trade? This is exactly the thing I did yesterday, and I had 8 winning trades. So I'm repeating myself again and again and doing the same thing. It's not different from what I do every single day. So we are inside our macro 10-20 period. It's our silver bullet macro, and we already hit a fair value gap here. We have high probability target towards buy side liquidity. So we'll just watch now. We'll just watch and we will journal what happened here. So see the price delivery. That's what I was telling you guys, that it's gonna be like this today. And that's why you are not looking for a trade. It's gonna be choppy. Yes, we know where price is going, but the delivery itself will be with less precision. And we do not engage in a scenario like this. We engage in a scenario where we believe price will move towards TP with speed. I'm new here. Can I learn from the beginning? Yes, you will have to go back to our mentors channel. You will have to watch 2022 mentorship, and that's how you will be able to learn for free. So see, I didn't want it to see this, folks, like price coming here. I want to see immediate rejection as soon as price hits this level, and so far we had that. If we are having that, that means what? We can be confident in our trade that it will go higher. But if price is closing a candle body here, right inside this week, that's when you know that you should be getting out from that trade. See the chart logically, not with emotion, folks. Don't force it. Force a trade to become a winning trade. So this is the red part. Okay, we don't want to see a candle's body closure below here. So price came back down to the 930 and 830 opening price, retesting this level. So let's see if price gets supports from it. So this opening price works just like a fair value gap. I'm just trying to put it easier for you guys, like why price is getting support from it. These are important price level that algorithm itself sees as support and resistance. So see that we have any closure at this part of the fair value gap? No, so we don't have to close our trade. Make sense? We'll hold it and we will put now our stop loss. Our entry was here, right? So we're in drawdown. We'll put our stop loss below here. Because if price is coming down and going below here, take a less risk. Sorry, take a less lose less money and just minimize that trade. Again, this is not a signal, folks. Okay, we are learning. Is this the only live channel that you have? Yes. What do you mean? Like, does people have like 10 live channels? I only have one. We are looking for price to not to close a candle's body below here. And that's how we manage our stop loss logically. Look at the delivery. You want to trade inside here? I'm going to take you guys on higher time frame. See that? It just like the condition itself is not favorable for a trade. But again, we are open to learning. So price did what here? Price generated so many equal highs up above, and that's not ASMT. That means what? A signature indication from price that is waiting for time to match with the delivery. Look at here. What did I told you guys? That at 10:30 you will see speed in delivery. This goes same for every single macro. So I hope you guys are writing it down if you are gonna be using my models as your trading models. So we got a breaker here. We still don't have it activated. And see, folks, just focus on the logic that I'm telling you guys. Do we have any closure of candle's body below here? No. So that's giving you what? As long as price is not doing that, price itself is confirming to us that it will move higher. And that's how you manage your stop loss. Less risk, more profit with a very tight stop loss, and you manage your trading like this. So I'm just gonna go get some water and I'm gonna come back, folks, okay, very soon. Just give me 1 minute, and until then, just you know what to look for here, right? So do that. So do you guys see power of tape reading? How am I able to do that? Identifying so many winning trades from here. One, I told you guys count, okay? Even when I'm telling you guys not to take that trade, just consider it as a count and see how many I win over losing. Do you guys see the power of logic? What is this? This, where did I put up my stop loss? Below here. So price is moving towards what? Equal highs. Did I told you guys that price will go lower? No, I told you guys that price itself will confirm the bias where it want to deliver next, and just like this, price does that. So let me know if you guys learned anything here. Let me know in the chat. Okay, let's see how many of you are actually finding this stream informative. How many of you are learning from here? So let me know in the chat, engage with me, and let's do it. Okay, the stop loss, if you are asking me about the stop loss, it's gonna be at break even below this breaker here. So in your eyes it's not a breaker, right? So if you drop down to the 30-second chart, this is a breaker, so you're gonna put your stop loss below here. If you basically took like an entry, wait, our entry was here, right? And that's how I managed my stop loss first time. Then I told you guys to put it below the fair value gap. Now how will you do it? You should be taking a partial up here. I believe, like, I don't need to tell you guys that this is where you get a partial. So every single time price clears out a major swing high, that's where you take a partial. And when you get a partial, you just put your stop loss at break even and you let the trade run. Okay, then target for 2R, 3R, it doesn't matter, you already made some money. How come you didn't get filled? If you are taking this trade, I told you guys multiple times where to enter. How come you never got a fill? It's not aggressive delivery. Price itself like waited here so much. Okay, with 1 mini. So when you have only one contract, just like do it like just manage your stop loss like that, like put it at the break even. Oh, I can see that Tanya as well took the same trade. Tanya herself took the trade. So after all, we have some similarities, right, in our visions. It's good to see that. So far we had like 3 good winning calls, right? So that's good. Yeah, it's so random. It's very random. So if you guys are finding it informative, can I expect to see a thumbs up from you? Above 90% told me that they're learning from it. So only half of you just liked it. So let's do it, folks. Let's like the stream. And again, we got a fair value gap here. This is not a breakaway gap, so we want to see price trading back inside it. So how you are gonna be managing your stop loss now? Our entry was here, right? So you will put your stop loss below this fair value gap now, basically like below here, below this one. But this is a breakaway gap, right? We got wicks next to it, so it's better to put it right here. And what was our original target right here? Wolf, if you have like more than 200 viewers, I'm opening to collab with anyone. That's what we're gonna do with in future. We're gonna do it with Ryan. Most of you know him as Dodgy, and like, yeah, we'll do that. We'll collab with each other and we'll try to see what we can do. So I walked you through the whole price delivery here, didn't I? I identified a trade here. I gave you guys multiple signals, but again, we are tape reading, okay? Here, then we identified this breaker as a low probability. We identified this breaker as a high probability, right? So see, we like basically we call the whole price move from even down when price was clearing out these equal lows, and even up where it's gonna go. So see, am I trading with a specific bias? No, I'm trading with the logic based on the liquidity levels. I already explained it, that why this breaker is a high probability. Just go back, rewind the stream when we were here, right? When we were trading inside this breaker, this was a low probability breaker. You will heard me talking about this breaker as a low probability, and that's where I explained why this breaker is a high probability breaker. So far we had 3 good calls and 1 losing trade, right? That's what we had on stream so far. So see, did you ever saw me worrying about a trade? No, I know that if I'm following the chart without emotion, I'll always have more winning trades than what I lose. Yesterday we had, so I'm gonna type it down here, so that you guys get more confident in what I'm doing here. So yesterday, what we had, 8 wins. We traded the whole session, basically like tape reader. I gave you guys signal and stuff like that. Loss 3, break even 1. Today, so far, okay, we are not done yet. So far we had winning calls of 3 trades. If you don't trust me, just go back and rewind the stream. You'll see me pointing out the trades exactly word by word. How many losses we had? 1 so far. So 2 winning trades. Now we'll need to lose like around 6 trades to get back to our original balance. Now see the power of risk management and logic. What are you guys telling me here? Okay, is possible to show this type of setups in Indian market, Nifty and Bank Nifty? Okay, I don't most of my viewers are trading on features or like this indices chart, so I'm gonna keep my focus here. But if I get more Indian viewers, that's when I'm gonna shift my focus to Nifty, Bank Nifty and stuff like that. So we got equal lows down here. That's what making this fair value gap a high probability fair value gap. Okay, I already told you guys about this model yesterday, so you can still engage in a trade from here. Okay, I'm gonna give you guys another signal to tape read from here. Price hit it, entry. Where will you put your stop loss? Below the breaker, because this is a breaker, and we'll target. See, this equal high itself is giving us a 2R. Make sense? If we don't have a SMT up here, then we're probably gonna go higher. Is it a SMT? Okay, let me confirm it. So let's go to the 1 minute chart, and seems like it is a SMT, right? ES cleared it out, but again, Dow didn't and Nasdaq didn't, so it's not a high probability SMT. It's not SMT at all, so we'll still expect to see price going higher. So this is our fourth call, folks. Fourth tape reading call. So why this was high probability? I shared this model with you guys yesterday, and it doesn't exist outside of our community. How a fair value gap becomes high probability? When we have equal lows above a bullish fair value gap. Makes sense? So equal low down here, and let's customize the writing. And now the price already got support from this fair value gap. You can put your stop loss at below this order block, sorry, below this breaker block, below this last candle here. And you want to see this fair value gap turning into inversion. That's how you know which fair value gap will fail and which one will work. And the target up here, right? So the trade signal was this. Now, are you guys counting? I told you guys to count like how many trades I lose over winning. This was our original management, right? Now we'll put our stop loss below here, because we are seeing chart with logic. Like, we don't want to see price coming back down to this level again, because price already balanced this area. Did price came back down to this fair value gap? I told you guys what, this is a breakaway gap. See, it's so easy to identify, and it gives you so much confidence in the trade to hold it, right? This area of fair value gap should not get failed. Why? Again, I'm explaining to you guys, we got a wick here, right? So this is what, a balanced area. Price delivered buy side, sell side again nicely. So price is gonna struggle here. That's why I told you guys to manage the stop loss like that. Why? I'm gonna take you guys on this pair. What do you guys see here? Price itself cleared out the equal highs from here, and again from here, right? So we have a SMT, we have a possible SMT. So in this trade now, when you see a scenario like this, don't get into the emotional side and don't force this trade to be a winning trade. Okay, just put your stop loss at the break even, because there's a chance for price to move down as it's a SMT, right? We have a SMT up here, but we are not closing our trade yet. So what did we do here? We called the market from this breaker exactly with stop loss and entry. We called the market from this breakaway gap exactly with entry and a stop loss. We call the market from this BC as well with the exact entry and a stop loss. So how many trades, folks, are you guys counting? Do that. So I'm gonna put another one here. That's what good experience looks like, and that's what you want to see inside your mentor. Does your mentor coming live and showing you candles like this one by one? So see that we already got our 2-hour trade here. Now we know price is gonna go up here. So now don't tell me you are not learning from my stream, because I called the market when we got inside inside our macro, because what we had here 1020 to 1040 inside this period, we look for a setup 1020 to 1040. See that? That's when we call the market higher, because that's when we know price itself will behave with high probability. Make sense? If I continue, if I never did that before, okay, because there's a level when you are talking in front of 500, 600 people, there's always a chance to perfect better. But with time, I feel like I improved it. Now I don't care what people are talking here, so you'll see me less banning people and focusing more on learning and showing you guys what to expect and how price will deliver. So see, another winning trade. Now we will wait. Okay, we will wait for price to show its hand again. Omar, how far to the left does the wick have to be formed, the gap to be considered a breakaway gap? As long as the wick is covering the fair value gap, that the new fair value gap that price forms, that fair value gap becomes a breakaway gap. There's no limit that this is how far the breakaway gap will go. Okay. So now again we get back to the patience zone. So if you guys are enjoying my stream so far, if you guys are learning, and I believe you are, because so far this is what we did when we are tape reading, right? And I'll can I expect to see thumbs up from you guys? And did anyone took this trade or this trade? Now let me know if anyone took an entry when I told you guys that this is an entry. Did anyone took another entry when I told you guys that this is an entry as well? So Jack took it, so many people took it, Mixes took it, then there's many people who took it actually. So I took the trade from very bottom and ride it to the highs. Very nice. We call the market from the very bottom towards buy side liquidity. So now where's my part? If you are taking a signal from me, give me my part, right? Donate some. So again, this fair value gap was a breakaway gap. I forgot to talk about this, but again, I believe you guys already understood it. Why it is a breakaway gap? Because we got what? A wick down here. So understanding breakaway gap is gonna give you a good idea how you can manage your stop loss, right? So we took a trade from here. When we identify a breakaway gap, we can put our stop loss at the breakaway gap, because we are not expecting to see it getting filled. Makes sense? And do you guys see how identifying a breakaway gap helps to understand which fair value gap is gonna get triggered, which fair value gap price will left unfilled. Thanks again for your lecture. Love it. Have to make some food for the kids now. Okay, see you tomorrow. See you tomorrow, Andrew. Tomorrow we'll be streaming even longer. We'll be streaming the whole session AM and PM, and we'll see again tomorrow how many trades, and tomorrow actually we'll take trades. Today we are just outlining it, but tomorrow you will see me taking these trades as well. So very, very nice delivery. We are getting inside. So why am I not looking for a trade? Look at the time. It's 10:48. We only look for a trade idea when we are inside 10:50. Like these trades are enough, I believe, to pass a 100 challenge. Like we got 4 wins, right? So that means what? Isn't it enough to pass a 100 challenge? I recommend Top Step over FX. I don't even recommend Apex. I never traded with them, but I traded with Top Step, and they are pretty good. I never passed a challenge, so hard to say. Then try to do it when I'm calling it the market. Just take every single one of the trade, and it doesn't matter like if I'm tape reading. I'm gonna tape read the condition that I believe is gonna be low probability. Okay, but it's not like for you. But if you're following me and you wanna be like me, so then I will recommend you when I'm tape reading, then tape read with me. But if you can take that risk, take those trades and see if you can pass a 100 challenge. Right, so we are getting inside our 1050 macro here. So now we'll have to understand if price is gonna go higher or it will get resistance from here. So we'll have to go back and look what price did here already. Right, so what do we have here? Now, can anyone confirm me that if it's a SMT? So it was a SMT, right? So now we'll expect to see this SMT failing. We got breakers here. So see, I told you guys that this order block will fail. And it failed, right? But not immediately. It came down, delivered more sell side liquidity, and then it failed. So this is what now? This is a breaker now. Right? This is a breaker. And we have, so how far we will expect to see price coming down? What's gonna be our last sign of defense? This is what is gonna be our last sign of defense, this part of the fair value gap. Because we got wicks next to the fair value gap, that means what? Some part of this fair value gap will work as a breakaway gap. Now let's try to frame another trade inside 1050 macro. Let's see if we can find it out. I didn't told you guys to look for a trade here because this part of price was outside of our macro. I was literally within $15 of blowing my challenge yesterday. I'm slowly crawling out of it with your teaching. You are welcome. You don't like looking for SMTs, do you, Hydra? No. So many people, so many of you are here, so you can just help me with one single stuff, right? I've been talking since 8 a.m. So I'm looking at 1 minute chart on DOW and ES and on NASDAQ 5 and 15 minute. That's the benefit of having so many monitors. And you don't need it. Okay, there's a guy who asked me a question like how to do it with one monitor. That's how I used to do it, like by opening charts in different tabs. So I'll put like 3 charts here to see the SMT, and after that what I'm gonna do is like I'll put another one like this, and I'll look at other time frames like the pair. I'm trading on what? NASDAQ, right? So I'm gonna look at NASDAQ 5-minute. These are higher time frames for me when I'm trading on 1-minute chart and 50-minute chart. So that's how I do it. So that becomes easier when you have only one monitor to shifting between screens like this. So you can do it with one monitor, but when you have the money, you just want to make yourself a little bit more comfortable, right? So that's what we did here. So we got an order block, right, with a fair value gap, and we traded back inside our breaker again. So there's another scenario that's repeating, folks, here. Okay, so what scenario? I'm just gonna show that to you guys. Again, this is not a trade signal, and this is where we will put a stop loss and target this buy side liquidity. This is a low probability condition. Why? Because price itself in a premium level, but this is a trade idea. So I hope you guys get it from this fair value gap. Why this fair value gap is where I'm looking for an entry, because this is not a breakaway gap. It's coming with order block, and the fair value gap that comes with order blocks becomes a high probability trading opportunity. Makes sense? So see, when I'm telling you that's a low probability trade, don't take it. Okay, don't even take it even on your demo or whatever, because I don't believe this is a high probability condition. So again, our stop loss in this scenario as we are tape reading is gonna be below the breaker here. Why? I already explained that to you guys, because this part of the fair value gap has a wick right here, right? So this is where we are not expecting price to come down. If price wanna move higher and respect our theory that we wanna see price coming up here as we have equal highs, right? So if price is doing that, our stop loss is in a safe place. That means what? In a logical level. So let's just wait. And there's another reason that I told you guys that this is a low probability condition. When we see a fair value gap with the order block, we wanna see it up here, right, just above or near to the fair value gap. When that fair value gap coming like lower inside that order block, that becomes a low probability scenario. Because if I'm just gonna show you guys, it's so simple to understand, folks. It just this little stuff makes your trading more stress-free. So look at here, we don't want to see price closing a candle body below the mean threshold of a order block. If price is doing that, that breaker becomes low probability. This is another reason that I told you guys that this is gonna be a low probability trade idea. So that's how you are gonna do it. So tomorrow I will take 3 trades in front of you guys in my real account, and after that we'll just open ourselves to tape reading. I know I can do more, but I also believe in the fact that if I do more, my expectation is going to be like that. There will be overstays, so I limit myself to take only 2 trades. If 2 trades are coming to be losing trade, I don't do it. I just tape read afterwards. And we will have 2 trades with 2 winning trades if we are like seeing chart like this, like we have been seeing here. So price formed equal low down here. So again, the last line of defense is where, folks, keep that in mind. I told you guys every single time I give you or show you a trade idea, there's always gonna be a last line of defense. And the last line of defense is where we don't want to see price going. If it's going there, we are probably wrong. Price will reach for lower prices and we'll have a better trade idea. The high probability trade idea is gonna be from this order block. But again, look here, we also got a breakaway gap here, right? Weak next to the fair value gap, so this fair value gap never got filled. Makes sense? Just focus on how I'm watching the chart. Am I getting a FOMO? Am I opening myself to a revenge trading? No. So that's where you want to be. This is exactly where you want to see yourself. So again, this fair value gap here, what are we expecting to see this one becoming into an inversion? Okay, this will confirm us, give us more confidence, and that's how we'll be able to minimize our stop loss, trail our stop loss with this kind of signature in price. So the 1050, as I told you guys, when does inside a macro price delivers with speed? When price is getting near to the middle of that macro. That means in this macro, what's the middle point? 11 o'clock, and that's when you will see speed in price. Now it's just shopping around. This is what? This is time distortion. See how much knowledge I'm sharing with you guys? I hope you guys appreciate it, right? Candle by candle, that's how you learn most. And we are not only like reading price, along the way we are also outlining trades, and most of the trades are turning out to be winning trades. Inversion activated, that means what? We can trail our stop loss. So our original entry was where? Here. Our stop loss was here. Where? Here. So now we'll put it below this swing low, or even if you are like confidence, what I will do in a scenario like this, I'll put it in the break even. There's no logic behind me holding it as I see equal low down here. But if you are comfortable with holding, then just put your stop loss here and let the trade run. If you're open to take risk, you will either way you will get 2R. And I believe most of you took 2 trades, so you are already in profit. So now tell me, I'm not teaching you how to take a trade. There was one person who complained about that. So see that? Why I told you guys that I personally will put my stop loss at break even. Because if price is activating above this inversion, going above it, price should not come below it. If price is doing that, that means what? The condition is becoming low probability as we have equal lows down here. So when will you look for SMT? When we have equal lows like this. Just confirm that if it's SMT on other pairs or not. And again, there's a great chance of us to retrace. Look at ES, and that's how you open yourself to partial. If I was in this trade, I will take a partial here. I don't care. I will take 0.25% off because I see the chart with logic. And look here, folks. What is this? This pair forming trend line liquidity. That means what? Price soon, once it gets done delivering that liquidity towards premium side, price will move with speed towards this direction. That means what? Price still has so much sell side liquidity. So what am I doing? I'm not trading with one single bias. I'm trading with price itself. And that's what I read like when I read the Trading in the Zone, that book. So that's a book I will recommend you guys. It's a Bible for psychology, and that's what you guys should have. So put your stop loss at break even, folks. Don't hope. We don't go there, okay? We don't hope for a trade to become profitable, for a trade become winning trade. So again, we got a breaker, right? Okay, it's not a breaker, it's a mitigation block because we don't have a stop hunt here. So I'm gonna show you guys the book. Just give me a second. Okay, so do you guys see this book? What is this? Trading in the Zone. If you are following me and you want to become the way I trade or tape read, this is a must read, folks. This book, I already read it more than like 10 times. You see this book? This is where you'll see Mark Douglas telling you, do not rely on a specific bias. That's what the traders, the professional traders who are millionaires, they don't do it. They change their shift, they change their ideas when with price. Okay, because price itself is not gonna deliver in one direction. It will deliver in sell side, buy side. So that means what? you will have either two sides. You can take so many trades. You can distinguish between low probability and high probability trades. So I do not teach to rely on a bias. Yes, we can have a bias on higher time frame. Just like we did today. The folks who are watching me since 8 o'clock, I shared with you a bias, and that was a bullish bias. Right? This is the Bible, folks. It's not about a strategy, trading strategy. It's about not reading like 10 times. I listened to it back in 2022 when I was working. So that's the time. Like overall, I listened to it so many times. I already read it like one time when I got this physical copy. So again, how will you minimize your stop loss now? So see, walking you through every single thing. You will put your stop loss at this inversion or below this order block, okay? Because we got an implied fair value gap here. What is an implied fair value gap? A hidden fair value gap. And as I told you guys, there's a chance for price to retrace lower. Why? I'm going to explain myself again. Do you guys see that these are correlative pairs? That means what? They move similarly. Again, this is trend line liquidity, right? So when will price break this trend line liquidity? You don't know. So that's why you will be open to take a partial when you see a scenario like this. And once you take the partial, you'll minimize your risk like the way I'm showing you guys. If I'm right, price will not hit my stop loss because I'm putting it at a logical level. If price is coming down, going below this inversion, how many PD arrays is gonna fail? Also look for that. We have a BC here, so if price is going below this BC is failing, 1 PD array. Then we have inversion here, 2 PD arrays. Then we have an implied fair value gap here, 3 PD arrays. And as our mentor told us that if 3 PD arrays are failing when you are in a trade, your S is next. That means what? Your stop loss is next. So see the logic? How I'm doing it? Candle by candle, and again we formed equal lows down here, right? So this inversion is gonna be our last sign of defense in this trade. Do you guys see that? So 1 PD array failed, folks. Now we have 2 more, and this is our last sign of defense. 2 failed. This is where you close your trade. You don't hope. We do not trade by hoping. Hoping that, okay, this trade is gonna turn out to be a profitable trade or stuff like that. Make sense? So see, we still don't have a closure below this inversion. As soon as price closes a candles, that means what? This PD area failed. And I know that this one will fail if price is trading back inside here. How did I know that? Because price, how many, I told you guys again that 3 PD arrays, if 3 PD arrays are failing, your stop loss is next. So I walked you through a whole trade idea here, right? So let's see what I did. Putting my stop loss down here, targeting all the way up here. Then I told you guys that this is where I'll take a partial. And if you were managing the trade like the way I'm saying, you didn't took a single loss here. No losing. So if you are like taking trades by hearing me, I'll always recommend you to do it the way I say it. So see how many PD arrays failed. If you are putting your stop loss here, that means what? You are taking more losses, right? But if you are putting your stop loss below this inversion, you are taking no loss. So how many trades we did today? So this is a break-even trade, right? I believe the folks who took it, they didn't took a loss. Break-even 1. So far we took 4, 5, 6 trades, folks. 6 trade by 11 o'clock. And the majority turned out to be profitable. So we're not looking for anything right now, folks. We'll wait, okay? Because we are getting done with 10:50 to 11:10 macro. We'll wait for next macro price to get inside the next macro. So again, I told you guys that when order block has equal lows below it, that order block has a higher chance to fail. So equal lows, we got it below here. So many equal lows. So let's see, this fair value gap turned into inversion. But again, see the low probability condition, price has equal high, equal low in both direction. That's what? That's a low probability scenario. So this is now inversion. If price want to come down, there's a good chance for price to come down as we have equal lows down here. We want to see price coming down from this inversion, not going above it. See the reaction? And why did I told you guys that this order block will fail? Proving the fact what I'm teaching you guys, okay? Proving it along the way throughout the whole session. Order block coming with equal lows. This order block has a higher chance to fail. It's not 100%, okay? Don't go there. Not 100% that this will fail. A higher chance of failing, and we have equal lows down here. Again, we are inside a chop zone. Why? Price delivered most of the liquidity, and today is a low probability day. So this is what we expect. 10, 11, 10. So we are done with most of our high probability macros. The next macro that we have is at 11:20 to 11:40, 11:50 to 12:10. And that's how long I'm going to tape read with you guys. And after that, there's no macro high probability. We have PM session macro that is high probability. But today we'll not trade PM as we have CPI tomorrow. So price basically will just chop like this throughout the whole PM session. And that's what you want to see. Look, do you guys see what price is doing here? Yes, and where price is doing it? Inside the weekly PD area that I shared with you guys when I started the stream. So far we had a good tape reading session, folks, right? So how many trades we outlined here? Let's count. We outlined just put it on your journal, okay? I'm doing it for you to put it on your journal. And we targeted like the equal lows that we had on higher time frame, right? I gave like two signals from here, then here again. Then we had another good trade idea from this level with a stop loss below the breaker, right? Then we minimized it down here, so like this, and again 2R like basically up here, right? So again I shared another trade idea. So back to back, so many winning trades. And we put our stop loss below here, right? Because we had a breakaway gap and we don't want to see it failing. And we targeted like 2R, right? Up here. And again, we had another trade idea here from this fair value gap as well. And then we minimized our stop loss to the break even as the condition went low probability. And this is what we were targeting. So see how many trades we took? 1, 2, 3, 4. And we had a couple of losses along the way on dollar and ES as well. On ES, I also identified another winning trade to you guys. I don't know if you saw it, like if you remember this scenario, right? So I told you guys to tape read it. This is the turtle soup entry that I shared with you guys, targeting the equal highs up here. I gave you guys a safe entry. I told you guys to wait for price to close a candle body above and then take the entry. You will be safe, and that's how you will know the price will go, definitely go there. And that's what happened so far. So we had like 4 winning calls, 1, 2, 3, yeah, 4 with ES, and we took 1 loss and a break-even trade right here. So take it on your journal, because you will have the recording as well, so you'll be able to like rewind it if you want to do that, and get the like take the notes from there as well. So this inversion respected price as well. Do you guys see why this order block failed? Because this order block had equal lows down here. And again, this part of this fair value gap was a breakaway gap. So if price is returning back to it, we expect to see price going even lower. We are not looking for any trade now, folks. We are out of our macro zone, so no trades here. And even price didn't even give us any entry. Do you guys see that? The breaker, price closed the candle's body below, and after that, if you were like entering, you should be you will have a chance to take aggressive entry. There's no safe entry here. So which fair value gap here is the breakaway gap? Which one? Who can tell me? Okay, I'm just gonna make it easier for you guys. So I'm just gonna put the measurement tool, candles body to body, and let's see how you guys are learning. So we got our, so now tell me which part of which fair value gap here is the breakaway gap. Is it with the discount or is it at the premium? Let's do a poll, that way it's gonna be easier. So along the way, I'm teaching you how to see these kind of signatures in price by asking you question, and that's how you learn best, right? Do you guys remember how you used to learn when you were in college? Just like this, right? If the teacher is telling you something, then he will also ask you a question like, what did you learn? Do you remember something? And that's how you learn the best, right? So we got our, from this part of the price, we were looking for that breakaway gap, and price even came lower, right? So the breakaway gap itself was here, because we got the wick here with these two fair value gaps. So basically like a discount and at the premium as well. So we traded from this fair value gap. Now there's another point. Okay, I'm gonna show it to you guys, that sometimes you will get confused when you see this. Like you can ask me, HYDRA, this is also a wick, then why are you not gonna use this fair value gap as a breakaway gap? Do you guys know why? Because this is not a swing. A swing wick makes that fair value gap more high probability breakaway gap. Put it down in your notes, it's gonna make more sense. And see on ES, I told you guys that this kind of liquidity, when price generates it, price will aggressively come down to this kind of liquidity levels, and price did, right, after it hit this order block. So now I'm going to take you guys on higher time frame, 50-minute chart. I'm going to show you guys what's happening there. What do you guys see here? We got an order block right now. So this here is a high probability order block. So let me hide the drawings here. Why? Because we don't have an equal low below this order block. And that's how you trust the order block. That's how you trust a PD array. So when price trades inside it, look at the time. When price is trading inside it, when price is getting near to a high probability entry, 11:20, right? Some of you will say, okay, 11:20 HYDRA is not an ICT macro. But along the way, I'm outlining the trades, explaining every single little bit of stuff, and showing you that these are actually macro. This is where you can look for high probability trade ideas. Right, so we want to see price coming down here. I believe this is not a SMT. Yeah, it's not a SMT. Good night, Salim. See you tomorrow. So we did another stop hunt. So that this week right here made our fair value gap high probability fair value gap. The folks who were here yesterday, I told you guys that when we have a week inside a swing high, basically when we have a swing high inside a bearish fair value gap, that fair value gap becomes high probability as well. Right, so this is gonna be our last sign of defense with this right here. So this is not a trade idea, folks, we're just tape reading. So this is gonna be the trade idea. Like, we don't want to see this part of the price action getting hit, and we'll target like this. So keep the scenario in mind, and let's see what price does here. This is the lowest probability trade because we are trading outside of our macro, but I see it. That's why I'm telling you that I see it. So we had a stop hunt here. That's why I told you guys that this fair value gap is a high probability fair value gap, because price is doing two things here. Price is clearing, delivering liquidity to old swing high, and as well as it's taking order from a fair value gap. And price itself left so many liquidity down here. So that means what? These are high probability targets. So see, I'm repeating a single pattern, how to see it again and again. And I'm distinguishing between a high probability scenario and a low probability scenario. And that's what the professionals do, don't they? Now, when will you be able to minimize your stop loss in this scenario? This one, when price goes below here, that's when you know, okay, you can put your stop loss below here. So this is not a trade idea. I told you guys, this is the lowest probability trade as we are trading inside 11, as our entry was outside the macro. So the original trade idea was here, right? Price already gave multiple chance to enter, and our stop loss was here and the target was here. So we'll put our stop loss to break even when price goes below here. Why? Again, think about 3 PD arrays. If 3 PD arrays are failing, your ass is next. Okay, so do you guys see 3 PD arrays here getting activated towards sell side? I think you probably don't see it yet. So I'll wait for price to go below here, and that's the time when I'll tell you that what are these three PD arrays that's gonna fail. Again, we also have so many PD arrays here. We have a order block here, which is more like a breaker. So this is the time when I expect to see immediate rejection towards sell side, because price offered so much buy side liquidity up here, right? We already cleared out this swing high, then this swing high. We have so much equal lows down here. So now do you guys see why this was a low probability condition? Right here. So we came back to the premium level, and now we are trading inside our macro. So this wasn't an entry point, it just was the trade that I can see outside of our zone, right? So we hit the premium level. Now let's see how price behaves here. We are done for today, folks. We had so many winning calls. We learned already so much. So now don't take any trades. Don't lose the profits that you already made. Right? You made so much. Just hold on to that. So another thing is that here on DOW is these equal highs. These are correlative pairs, folks. Okay. So when price generating a strong liquidity on DOW, the same kind of behavior you will see on NASDAQ. These are advanced stuff. Okay. You won't understand it in one day. You won't be able to align, look at the chart like this in one day. It will take time. And if you are here with me, learning, I believe you will be able to do that in a very small time. So what's gonna be your last line of defense in this scenario, this inversion right here? This is not a trade idea again, folks. So this is gonna be our last unit. We don't want to see price going below it now, right? And how do you know that the order block will fail? Again, the same scenario, folks. You are seeing it again and again and again. And this scenario, no one outside me ever talked about. Like, that's a challenge. Even our mentor, I learned this stuff from him, but he never talked about this concept like the way I'm sharing with you guys. That when we have an order block or any other PD area, if you are, suppose this is just look at here, this is a bearish PD area, right? So if price is forming equal highs above it, this PD area is gonna be a low probability PD area, and that's when you know that you wanna avoid this kind of scenario. If suppose this order block didn't have any equal highs, I will take that by shorting the market because we still have equal lows down here, right? But again, open yourself to the thing that is not 100%. That's why we avoid this kind of scenario. $11.24. We are still trading inside our macro, and so far looking good, right? We generated so much sell side liquidity down here, and we also activated this inversion, and now we are trading inside our macro. So I can see another trade area, but I'm not gonna share it because some of you will took it, and I don't want you to lose the profit. But know that this invert price should not come above this inversion. Okay, in a scenario like this, I'll put my stop loss above this swing high, and if it was a good day, like if it was a high probability day, not day before CPI, I would have taken it by targeting this equal low, because so much signature from price where it wanna go, and price already hit our premium level. So don't take it, folks. Okay, just stay it. We are already done trading our high probability macros that I told you guys. So see that price came back up, hit the premium level, and again going below inversion makes a condition high probability. But again, we are not doing this today. We are done taking trades or outlining trades. Okay, folks, we are just tape reading different scenarios. And again, let's take a look on DOW. What is this? This is something that I told you guys as an inversion, right? That means what? This is our last line of defense. That means what? We don't want to see price going below it. That means what? We will be able to put a stop loss below this inversion if we are taking this trade, and this is going to be our target. So see, it's you who get FOMO. It's not me. I know that if I do this with logic, yes, I will have losing trades. I had one losing trades, but at the end of the day, I will win more, right? 2, 3, 4 losing trades to me, folks, in a row means nothing. It's just a part of the business. You will have to think in ratio. 60% of the time I will win, 50% of the time I will win. I will lose 50%, 40%, 30% of the time. And I'm not gonna lose my mind and doubt the model when that losing streak is coming. And you guys will see that, okay? There are days when I went like 2 days in a row with losing trades, but again, at the end of the week, I turned out to be profitable, and I was able to minimize those risks. And it happened live on stream. And this is gonna be the last scenario that I'm tape reading, folks. It's already so long, and I'm basically tired. I've been talking since 8 o'clock, and there's always something to talk about, right? What can I do? Like, price itself is leaving so much signature that I wanna show you guys that what it's doing, what I'm thinking. like this. So this is more like a BPR, again low probability scenario, and again price is consolidating, right? What did I told you guys? Price will become high probability and it will deliver with speed when we are at the midway of a macro. The midway of a macro is 11:30. Okay, so I'm gonna tell you guys another thing. This weekend we will have a back testing session, folks, so don't miss it. Okay, I know there won't be much viewers because most of you here want to take a trade, but at back testing session we will choose a month of the year, a year randomly, and then a month randomly, and we'll put the same logic and we'll see how we perform when we're back testing. And that session, trust me, is gonna be 5-6 hour long. It's gonna be on weekend. It's gonna be at PM or AM session. I don't know about that, but I'll let you guys know before the day comes. Okay, I'll let you guys know one day earlier. So again, do you guys see the delivery? Even though we have equal lows down here, is price coming towards this equal low with speed? No. Why? This is how low probability condition looks like. You guys see that price is just moving from one PD area to another with no setup basically. In a scenario like this, price generates more emotion than confidence. Miss you, HYDRA. Like, why? I'm here. I'm talking to you guys. I've been talking for like 4 hours now. How long this stream is going? 3 hours. Yeah, it's gonna be 4 hours. So why are you missing me? I think I know you. So let me check. I think I know you. So oh, I don't. Sorry, I had one person with the same name as you, so I thought you were that person. Anyway, so see this, see the low probability condition. What price is doing here? And I told you guys that we are done with our high probability macros, right? So this is what's happening, and we are basically done for today so far. And now we will just look how price delivers liquidity here. This breakaway gap, see, it never got filled. Price came so close to it, right? And what it did here, it just touched the premium and then it got rejected. This part of the fair value gap never got filled. Now see how breakaway gap can help you to put the stop loss. Yes, low probability is accumulation. So accumulation, we need a manipulation. And I want to see the manipulation happening here. Why? Because I'm expecting price to go here, right? So this is the magnet. This is the drawn liquidity. We are accumulating orders. So these are some stuff, folks, that I don't talk about in chart, but it's always there in my mind. This part here is the accumulation. So let me know, like, when I'm identifying a trade, if you want to know about like the accumulation phase, stuff like that, or market maker buy and sell model, just tell me. I'm just gonna outline it for you. So this is the accumulation part, right? So what I'm expecting here, I'm gonna put it into AMD. Accumulation. This is where I'm expecting to see manipulation, because my drawn liquidity, my high probability target is down here. Why? Because these are equal, so many equal lows, and this is the cleanest level. So I'm expecting the manipulation here. And what I'm doing here, I'm telling you guys what I believe is high probability. It's not for price to do exactly the way I'm thinking, but it's based on my experience, what I saw it, how I saw it, how I saw price delivering this type of scenario again and again. So the manipulation, I'm expecting it here. It's as we have equal highs up here, but again, if we have a SMT up here, price will not come here. Okay, so what did I told you guys? I look for SMTs when price forms a equal high or equal low, because if that equal highs is a SMT, then price will not come down here. Yeah, you have a doubt? Let me know in the chat what doubt you have. So the distribution itself is happening now, right? Look at the time. I told you guys to focus at 11:30. This is the distribution phase. Now makes sense. Yes, there are a couple of things that I see on my subconscious mind, but I don't talk about it. So if you guys don't ask me the question like, how are you seeing the market maker buy or sell model, how you're seeing the AMD here, so ask me that, because I don't need it on my chart. I already know what price can do and what is high probability to me. If that happens over this, then I'm gonna take that trade. If that doesn't happen over that, I'm just going to avoid it. I'm going to wait for price to go inside another macro. So see, along my model itself builds the patience, right? The model, like it's a buy one, get one free. You buy the model, you'll get patience with it. I never trade ES or SPX. I never trade that pair. I either trade NASDAQ or DOW. Huge love from India. Thank you. Huge love from Canada. So very soon I'm gonna close the session, folks. Okay, so let's do something. Let's see how many of you are today are in green or in red. So let me know in the pool that I'm gonna do. How was your day so far? And only the people participate. I'm asking this question only to them who took the trades with me. Like, I had identified a trade and suppose you took it, and it's for them. Let's see. I believe if you followed me like to the tick, the way I'm telling you guys to minimize the stop loss, take the entry, and you guys saw the precision, right? So let's see. And only participate the people who already took some trades from me. So now, do you guys see, do I need a mentorship to make the money? No, it's just another income source. I have the skill. I have the skill to do it, and people love it. And that's why they want to learn it. I don't know why people complain about mentorship, where ICT himself like taught for his whole life, right? If you can't afford it, then I'm doing so much here, right? I'm opening myself to the people who cannot afford it. There's the fact. And I'm not like limiting myself from sharing the jam. Look how many things I shared here, how many trades I outlined, and all that good stuff. Even yesterday, every single time I see a candle, I'm telling you what it's gonna do, right? So you are learning. These are mentorship level streams, folks. To me, it's not about winning. To me, it's teaching you how to read the price, folks. That's what I focus on. Because if you know how to do that, you will have winning trades again and again. And see, I'm proving the fact here. Been watching you for a couple of times. Big Dave, thank you. So 90% people made money. The 10% lost it. Like how? $88. So that's the target, like to win more than losing. There's always gonna be a losing side. There's always gonna be some people who will lose even when we are taking a winning trade. So I'm just gonna tape read this setup, how it behaves. Okay, so there are two scenarios that I can see here. If price is coming down and clearing out these equal lows, we'll expect to see price moving higher. And the same scenario I showed you guys on ES. Do you guys remember? So see, the same scenario again is repeating. So let me find it out. Do you guys remember this scenario? Just go back at like suppose 8:30, near to 8:30, and you will hear me talking about this scenario. So what did I told you guys? We will wait for price to clear out one direction and target the opposite one. Now match this scenario with this one. Exactly to the tick, the same pattern is repeating. Do you guys see that? So see, I'm teaching you the models that price itself repeats so many times. And see what the same scenario, folks. So we'll just wait for price to clear out one direction. And I told you guys that I see two scenarios here. So another scenario is up here, price clearing out the equal highs and then moving towards sell side liquidity, and that's gonna be the high probability scenario. And if it's happening inside 1150 macro, because we are getting done with 1120 to 1140 macro, the next macro is 1150 to 1210. So this is the high probability scenario that I'm expecting. If price is clearing out the equal lows, then there's still a chance for price to move higher, but that's gonna be like less high probability than this one. And why HYDRA is gonna be a high probability towards sell side? I don't know, like if you guys already have the answer. Like if you have the answer inside you, then know that you are already improving so much, and you won't need to watch my stream after 1 month if you know what's the answer here. So now let me tell you guys what's the answer. Do you guys see this? What is this? Trend line liquidity, right? And price is generating this, leaving it, and then moving towards buy side liquidity. That means what? Price is offering only one side liquidity and it's leaving most of the sell side liquidity. And not only that, we have a trend line liquidity down here, we also have this equal lows. And now how I'm gonna see chart, folks. Look here, I'm not basically trading with one single strategy, so it's just different strategies aligned with each other. We have OTE up here, right? We also got a breaker. So let's see what price does. This is gonna be the last sign of defense to expect a short. So this is what? This is CB, and we cleared out the equal high. Now we only have liquidity left here, and this CB, why I'm telling you guys it's a high probability. Look at the OTE level. This CB itself is coming inside the OTE level. Makes sense? So there's another question can be made from you, that you guys don't ask me these questions, but I know these are questions like, HYDRA, you told us this is a breakaway gap and you don't want to see price trading inside here. Now price is doing that and you are still expecting a short. Why? Because of this draw on liquidities, because of the liquidity levels. We do not just trade based on one concept, folks. You will never see me doing that. I'm gonna align different strategies, different price action, and at the end of the day, DOL is gonna be my high probability scenario. So in a scenario like this, we are still not trading inside our macro, but I'm gonna show you guys. Okay, we're just gonna wait for the macro, folks. 1150 to 1210. Until then, just look at it here, because if I'm sharing the trade idea, you will just take it, and I know I don't want you to see losing it when I know it's a low probability condition. Right, so we are already done for today, folks. Look, Look at our winning ratio. This is our DOL down here, and we are waiting for price to go inside macro. That's when the condition becomes high probability. That's when we can trust the setup, okay? Because look here, price has equal highs up here. That's why I'm not telling you guys to take a trade from here, because these equal highs can attract price as well. And if price is eventually coming up here, we'll have a turtle soup entry, a better entry. So the patience always worth it. I've took 2 trades using your start myself, and both are wins. I'm excited to learn more about your strat. Thank you, Curry. That's the aim, to win more than what we lose. So price itself is respecting this CB, and that's what we want to see. And how will you know that price is respecting this CB? When it's not closing a candle's body above it. The wicks can go up there, but the bodies are respecting this CB. The bodies are staying below the fair value gap. Always remember, folks, in a candle you should be focusing inside a candle's body, not at the wick. And now, do you guys see that? The wick can go up like price as up as it wanna go. And again, if price is trading at this order block, what do we know? That this order block will fail. This is not a high probability order block. So see, it's worth waiting. It helps us to take less losing trade and win more trades. And it also builds the patience that we don't have inside us. So as I told you guys, my models will come with patience. So buy one, get one free. After dinner, I'm gonna be coming here again. HYDRA educational session. Thank you, mate. So this order block is gonna fail, and that's what we are expecting to see. This one failing, as we have equal highs up here. And the same scenario repeating here, order block, equal lows. So we are waiting for a entry here inside our 1150 macro. So see how waiting for the macros takes you out of the zone to lose a trade. If you like took an entry here, you are losing that trade, because look at the time. Time is not matching with our setup. Time itself makes our setup high probability. So we are just gonna wait. I'm talking a lot. I'm tired. So nonetheless, I'm enjoying it. I know I'm helping a lot of people, even like from this stream or the streams that I'm gonna do. If 1 or 2 people are turning out to be profitable by my concept, I'm happy. That's the aim. My aim is not to make each and every one of you profitable trader, because it's always gonna be depend on you and the work that you are putting in. If you are lazy, you won't make it. Do you guys see laziness inside me? No, I enjoy this stuff. I love this stuff. This is the best profession in the world. And like, I never felt so much enjoyment in anything else. I never get tired when I'm talking about chart. I never lose patience. That's because what? Because this is my passion. I enjoy it. If you get tired with trading, that know that it's not your passion, and until the day you make it a passion, you won't make the money. It's that easy. So this fair value I identified to you guys, the outline to you guys, because it was at OTE, right? And again, we had the order block here. Sorry, breaker block. Why am I saying it order block? It's a breaker block. So see, now we'll wait. We are still waiting for price to get inside the macro, and you guys will see that, like you saw before, when price is gonna get inside this small little time frame, price will deliver with much more speed a cleaner price action. Makes sense? But again, this is not 100%, so never put everything in one trade. Never put like even half of your account in one trade. Do the way I go is like 1% on my live account with actual money. If I'm trading on a funded or a challenge account, 0.5% is the target. So see why I do that? Because I know over time I will have more winning trades. So it will just require a little bit more days for me to pass the challenge, but I myself will not get won't get like emotional if I'm risking 0.5%. Do you guys see that? So it's everything mixed with trading that makes your trading high probability. That is making my trading high probability. I'm winning more than losing. Why? I do not trust a PDA. I never do that. There's always a chance of losing. So if there's a chance of losing, I'm gonna put 0.5% risk, and I'm gonna minimize my trade stop loss like that. So again, don't get the FOMO, folks. Once price gets inside the macro, we will either way take a trade. We'll be able to take a trade. You'll never see me getting FOMO. You can tell me, Hydra, you missed a good entry from here. I don't care. I will have so many entries down here. I can take an entry from this fair value gap when it turns into an inversion, or if price is still hovering inside this inversion inside our macro, I'll be able to take a trade from here, and that way I'll have less risk. That means what? I'm gonna put my stop loss up above this swing high, right? Either way I'm getting 2R. 2R is fixed here. So that's what I have been telling you guys for a year, that if you are identifying a breaker, correct breaker, that breaker minimum will give you 2R. So again, I'm talking a lot. So we're just gonna watch this, folks, and gonna talk less. So this fair value gap turned into inversion. Again, I don't want to talk. Then again, I see so many stuff that I want to talk. Oh, what can I do? I'm looking for a short. It's a tape reading short. The trade itself, I'm not gonna take it. Yes, we are in the macro 11:50 now. Wait, folks. Okay, let's get a better execution. So if you want to do it, I'm not gonna do it, okay, because the whole condition to me is a low probability. From here down here is gonna be the target, or basically like 2R. So now that price moved towards sell side liquidity, right, you'll minimize your stop loss like this. I don't know if you guys were able to take it, but again, we are tape reading. Again, I told you guys that I'm not gonna get FOMO. Why? Because again and again price will give me an entry. If I know where price is going, I don't care about where I'm entering, because this is where price is going. Either way, I'm profitable. Do you guys see the logic here? So again, another entry here. How am I gonna do the stop loss here in this condition? This stop loss is gonna be very less, like this, and the target is gonna stay same down here. See the speed, look at the time. I told you guys that price will get speedy, it will deliver more when we are getting inside our macro. Now do you see the proof here? And now that price moved a lot towards sell side, is so near to take out these equal lows, there's a possibility for price to reject from this rejection block, but it's a low probability, but it can happen. That's why I'm gonna manage my stop loss like this. And the trade that I showed you guys here, this trade stop loss is gonna be at break even. So if I'm losing, I'm only gonna lose one trade, this one. If I'm winning, I'm gaining more. So see how I trade when I'm pyramiding the entry? This is how I do it. The pyramiding, the rule is that if you are pyramiding, you will have to take one trade at break even. If price is not giving you that break even trade, I will not be entering at the second trade, or I'll not pyramid in that entry. So see that? Do you guys see the reaction here? That's what I told you guys. There's always a chance to lose that trade. And that's how you see the chart. Rejection block here. This rejection block, we don't want to see it working as a support, but there's like 20% of chance price will stop here. Like it did here. Like it did here. Right? So when price was here outside of our macro, didn't I told you guys that if price is still inside this inversion, when we are inside the macro, we'll be able to take a trade from here. So do you guys see why I don't get the FOMO? And this is exactly the thing that I'm teaching you. See the chart with logic, learn how to see the DOL, learn where price is gonna go, and after that everything is easy. It doesn't matter if you're taking a trade from breaker or fair value gap or inversion, there's gonna be always a trade, folks. Always. You will not get here though in one day. It will require time from your part. So as I told you guys, the stop loss is gonna be above here. So now I'm gonna explain and show it to you guys. 3 PD areas, right? We need 3 PD areas to fail, and above 3 PD areas we're gonna put our stop loss. This is number 1, number 2, right? Where's the third one? Do you guys see that? Why did I talk about hidden fair value gap? So see that? Like now we have only one trade left from this inversion. So see, if I'm losing only one trade, but I'm taking 2 trades here, and that's how I don't get emotional when I'm like doing what? Pyramiding in entry. This is our last line of defense because this is an implied fair value gap. So let's see, we only have one trade remaining up here. And now if price goes below here, I'm gonna tell you guys, if you are already in a trade from here or somewhere here, put your TP here, because price itself confirmed to us that it will move even lower. Now the price took order from this fair value gap. That's how you know how far price is gonna move. This is gonna be our high probability target. Now you will take a partial here if you are already in that trade, and your stop loss is at break even. Make sense? Again, I told you guys that we are done with today's session, right? We are done with the trades that we took or we identified. So this is gonna be it for today, folks. Just tape read this setup, and these are low probability condition. We till 1050 is what we have as high probability macro. After that, I just tape read. I do not take any trade, and that's what I told you guys. Do not force it. The condition itself is low probability. If you already took winning trades, don't take any more trades. So again, we did this. We came back to the premium. So see why I'm avoiding trades today? Because of this. So I hope you guys enjoyed the session. I hope you guys learned from the wins that we took. You learned from the losses that we took. You learned from the break-even trades that we took, because I explained every single trade, even the losing ones. We didn't hesitated to go look at our losing trade, right? Because that's where we learn most. Why that trade failed. Like when you are doing it alone, I know it's gonna be hard for you to look at the losing trade. But when you are not doing it alone with me, you will look at losing trade and you will learn, right? So see the condition here. PM session is gonna be worse. So if you are a beginner, I'll highly recommend you just to tape read. Do not even force yourself to take a trade. Tape read the PM session, because tomorrow is CPI at AM at 8:30. So the PM is gonna be very low probability and it will deliver like this. So I hope you enjoyed the session. I hope you found it informative. I hope you learned from the losses and the wins as well. And I'll catch you guys tomorrow again at 8 o'clock, and we'll watch the delivery of CPI together. We'll try to predict where the CPI will deliver and after the CPI we will look for trades, and those trades we are going to take it into a real account, because that's the high probability condition, right folks? So on your way, if you just leave a like, I'll appreciate it, and I'll catch you guys tomorrow at 8 o'clock again, okay? And there's a possibility that I'll do a whole session tomorrow, so come here with your snacks, with your popcorns and stuff like that, because we're gonna be done after we take 1-2 trades, and after that we'll continue to tape read and stuff like that. So have a good day folks, good luck, good trading, and I'll catch you guys tomorrow at 8 o'clock. Peace.